What's up, everybody? Welcome to the Bootleg Weekly. Roy just messaged me right before this and said I might pull a Tanner, and I decided to go live anyways just to show you guys what I'm dealing with. And there he is. He's backstage. Roy, how's it going?
Howdy.
Pull a Tanner? You're late? You guys gaslight me.
I'm not hearing you. Hold on a second.
It's probably on your side because I can hear myself.
Can anyone else hear Tevis or myself?
I can hear you, so they can probably hear you. Yeah, we're good. I think the problem's on your side.
Yeah, I got it now. I can hear you. Can you hear me now?
I can, yeah. I was gonna say, you guys gaslight me into telling the audience that I'm the reason we're late, and so sometimes I want to just go live so that they can see the real reason we're late, and it's not me. It's either you or Tanner. I'm perfectly on time.
Well, even though Tanner's not here today, I'm going to blame him. Even when I texted Tevis, I'm like, hey, computer is being super slow. It decided to turn itself off. I said I might be pulling a Tanner. So that is a thing, and that's what I'm sticking with.
It's his fault, man. Hims is huge, only started.
Yeah, Hims thinks it had earnings or something, like the way that it's looked. Have you looked at today, like what it's been up year to date?
Yeah, like 65% or something ridiculous like that.
Yeah, 66.07%. It's just like, wow, like they must have reported really good earnings, right?
Yeah.
Except
dude, I got a text message today from my aunt of all people. In her mid-50s, doesn't really. I mean, she invests because she got addicted to it, but she's like super degen and doesn't invest a lot of money. And she literally asks me, "Hey, what are some good tickers?" And so I gave her SoFi at $7. Okay, SoFi does a 2x in a matter of months because she bought it back in August, September. She bought it at 7. She sold it at 8. Okay.
oh no,
and she started panicking, and I was like, "Why'd you sell it?" And she needed the money, or she made an excuse or whatever. And I was like, "Okay, well, first of all, don't invest with money that you need, and second of all, like why are you making these short term decisions?" Like, because she would look at her portfolio and it would go up, and she started panicking, and she's like, "What should I do?" And I'm like, "Just buy back in." And so she bought back in at 14, and it goes to 18, and now it's down to like 15 and a half or whatever. And then the second stock I give her, because she's like, "Give me another one." I give her Hims, Roy. I give her Hims, but I tell her, "Hey, it's expensive. Don't buy it right now." This woman, and this was literally the day we hit our previous all-time high, one day before the Amazon news, and it was at $30. She put her entire paycheck, and I'm putting her on blast on the stream. It's funny, but she put her entire paycheck into Hims. And then she waited to tell me until the Amazon news, and it crashed down to $20. And I'm like, "All right, you can buy Hims now." And she's like, "Too late. I already bought it like 2 days ago." And I'm like, "Why? I told you not to buy it, and it's expensive." Anyways, she averaged down. She has like a 25, 26 average on Hims. Hims goes to 42 in a matter of like 2 months of her holding it. And she texts me today, and I thought it would be like a thank you or something like that. And she's like, "Give me another ticker." And I'm like, "This is not a casino. Like, I can't just like throw out tickers that double in a month for you. Like, you had SoFi doubled, you had Hims that doubled. That's incredibly lucky that you got those at that time, because I've been, holding those for longer." And she's like, "What about AMD? Is AMD a good one?" And I'm like, "No, like, stop reading the articles on like the homepage of your, Yahoo Finance. It's ridiculous, man."
Yeah.
I swear.
And she probably bought AMD. Did she buy AMD then?
No, I hope not. And I was like, "Why are you buying other names?" And literally, Roy, she responded. She was like, "Because SoFi's not moving. It's just going down every day." And I'm like, "Okay, we have a problem here."
Yeah, I mean it's funny, but like new investors, like that's kind of how they are, if they look at their account often, like that's a mistake that a lot make, is making decisions based on price movements only. especially on a daily time frame or an hourly time frame. Unless you're really into TA and that's your thing, yeah, don't do that.
Yeah, exactly. And it's just like the excuse that she's like, SoFi's not moving. It hasn't moved. And I'm like, what do you mean it hasn't moved? She's like, it's just going down from like 17 to 15. And I was like, oh my God, don't. I was like, just buy more SoFi. Just don't question it. She's just buy more. And what should she was like AMD. And then the second thing that she asked me was like super microcomputer, I think SMCI. And I was like, stop, just stop. Because like whatever she reads about on the articles, it's like after the fact, after the news has come out. And I said, don't buy any of that stuff.
Yeah, no, I mean, like those are popular names, but that doesn't make them good. And maybe those will work out, but like AMD reported today, and yeah, what I'm kind of seeing with earnings are, well, let me ask you this: what names are there any names that were interesting to you that reported earnings since we last did one of these 2 days ago?
Yeah, it's crazy. When Roy and I were scheduling this live stream, we said, hey, what are the topics for us to talk about? And we listed off a whole bunch of topics. And when I was scheduling this, I realized the last time we did a bootleg was 2 days ago, and it feels like 2 weeks ago because so many things have happened since then. As for myself, like I'm just concentrating, man. I'm just going, him, SoFi, Tesla. I'm running the wheel on those three names. I'm not really, doing too much, not doing too many fancy things right now. I don't really want to buy anything. I was thinking about a little bit of PayPal today. But yeah, I think I'm fine where I am right now.
Yeah, and I've mostly been just DCAing into names. I'll likely buy the dip for PayPal tomorrow or the next day, so it'll be over the next couple of days. But it's not going to be as aggressive as I had thought initially. We'll talk about the earnings of that. Palantir, of course, went on Monday. Enphase is another name that I hold. Went this afternoon, and I've not dug into those numbers deeply. Also noticed AMD and Google as well. So lots of things to report. Before we get into that, HIMS, why is it moving so much?
Because it's amazing. There's so many reasons why it's moving. I was actually thinking about making a HIMS video this week, and they have earnings coming up in a couple of weeks. But there's a whole bunch of stuff for HIMS, man. Like, first of all, the short interest is ridiculously high for that company. It's like 30% short interest. So I suspect some of that move is, shorts closing and having to buy essentially. But then the other pieces of news is around the semaglutide, and then also the management teased out new products, but also just running up in anticipation of earnings, because earnings is going to be great. I think the revenue growth estimate was like 90% year over year growth. So that's all going to be, well, we'll see this week, right? Because Novo and Eli Lilly both report in the next 2 days.
Mm-hmm.
And in the past, HIMS has been very volatile whenever both of those names have reported because of the GLP-1 news, or the GLP-1 association, I'd say. I just want to put up this post that I made today, and I think it's relevant because people see the stock price being up 65, 66% year to date, like in the last month. And I think they kind of lose sight of the bigger picture. So, in the post here I made earlier this morning, I said HIMS is up 60% year to date. How much higher can it go? And this is just a slide from their May presentation where you can see here, and this is also for Tanner, who is the newest HIMS investor in the chat. They highlight the total addressable market across 4 major verticals that they're operating in. And then they have all of these empty slots here for product offerings that they have not launched yet that are on the roadmap. And we know these two are confirmed launches for 2025. The menopause solution was as a result of them bringing on Dr. Shepard. And she basically said, hey, that's a big focus. And then the CEO posted about testosterone directly on X. So we know those are both coming in 2025. But you can count out here 11 product lines that are still on the roadmap, that are planned, that are not released yet. Like this is a company right now that, they're 8 billion and change in terms of market cap. Let me see here. They have $9 billion in market cap. They're going to do like $1.5 billion in revenue, growing 90% year over year, and they still have half of their roadmap not even released yet. Like we are still so much in the early days of this company's growth trajectory and the TAM capture that is ahead for this company, just in my opinion. So I think the market is largely starting to realize. I hope 2025 for this company at least is going to be a year that they disassociate a little bit with regards to that heavy association with just weight loss, and they focus a little bit on newer product lines and the potential that they have there. Because weight loss, which was one of their most recent product lines, that was also their fastest growing product line, like their fastest to 100 million. And so what you're seeing is every new cohort or every new product line that they release grows faster than the previous ones. They're optimizing how they're doing these releases, and they're optimizing essentially cross-selling to their member base. And so that is something that if you just look out a couple of years, that is very, very promising for their roadmap.
Yeah, and if folks aren't familiar with HIMS, like there's a number of things that differentiate it. It handles data really, really well, and so that's one of the reasons why in some ways it trades like a SaaS. The CEO has talked about HIMS as that it is telehealth, but it's really a data play, and they have differentiated data. They have, they're considered. I consider them a leader in the space, and that's what really shifted HIMS in my mind is. When I realized, and I looked at it a little bit and I saw the price falling down and you were banging the table telling me, hey, I should really take a deeper look at it. But realized I was already thinking about it as in terms of a market leader and in terms of a company that in the future that it gets added to the S&P 500. And I'm like, okay, so if I believe both of those are true and that there's an actual mode because of the personalization that they're able to offer with the medium of their products, and there's a whole bunch on the back end too. This is not HIMS Weekly that we'll get into, but I'm like, why don't I buy that? And so I did. And here we are. This is actually my first quarter, I believe, as a shareholder. I might have just bought around earnings before, but I think this is it actually. Enphase is another one like that. But no, I think you're right. I think that this is early in this play. Now, as Tevis said, I see a couple of people asking, is it too late to buy HIMS? Is it still a buy at this point? Yeah, I mean, like quality companies that are growing rapidly are a buy. I would, at this point, I would slowly buy in. It can still run up a lot, but we're at all-time highs. So, and look at how volatile HIMS is. Like, if it, this week, the rest of this week drops 10%, especially if Eli Lilly says something, it's like, okay, yeah, been there, done that. It happens. It goes down 10% on just a rumor of GLP-1 shortage being removed from a drug that they don't even carry. So for myself, I've sold covered calls. I've rolled them a couple of times. I'll continue to roll a good chunk of them. But HIMS is a stock that'll give multiple opportunities for entry. So I wouldn't say like this. Look in the company, see if you like it, see if it makes sense for your portfolio, and get ready accordingly. I wouldn't say you need to buy all at once the moment it goes down $1 or $2. But over this year, long term, I think there's a lot more to run for HIMS this year and over the next few years. Now, one other thing that's a big factor, and this is one of the reasons why I think it's pretty sensitive with it, two of its kind of competitors coming out, is they're able to compound GLP-1s, semaglutide specifically. And when that goes away, and we know it's going to go away at some point this year, probably in the first half, could be tomorrow. But that's going to dry up some of their revenue. It's going to give them harder comps for a year as well. But I mean, that's a known factor. I think that's one of the reasons why the shorts are very, very aggressive on this. But man, even without that, you take away that revenue, they're still growing over 40% year over year, well positioned, and their in-house products are absolutely great.
So yeah, a couple things just to tackle that question. I think whether you do or do not buy HIMS is a matter of how long you plan to hold it, because like Roy said, it's volatile. I think in the short term, within the next couple of weeks. So they report earnings on February 24th. And Roy, just I guess for your awareness, last earnings, almost every single analyst question was around weight loss and GLP-1s. So that is very much the market focus. Now that's both a risk and an opportunity. We know semaglutide will be taken off the shortage list sometime soon. I actually saw this post. I mean, it's up for debate when or how long that stays. I saw this post around it today from Jason, who said it's not going to be taken off shortage anytime soon because the Trump admin has a gag order on federal agencies, including the FDA, starting on February 1st. The Trump administration directs federal health agencies to pause communications. So the shortage is the only headwind, I guess, with regards to the GLP-1 side of the business, effectively off the table. Now, we know that this might change, but this is the part that I think is more relevant. Trump's new FDA chief loves compounded GLP-1s. He's actually working for a compounded GLP-1 solution called Sesame. This guy, Dr. Marty McCary, and that's, I mean, HIMS jumped like 20% on the day that this guy was nominated. And this is somebody who is going to be a real advocate for GLP-1s. And so I don't think that if there's a question of semaglutide coming off of shortage, my guess is probably this new administration will have something to say about that because there's conflicting priorities. So on that's on one side. But to Roy's point, and also since Tanner is in the chat and he's a new investor, you know, this company is growing, like Roy said, over 40% without GLP-1s. Their expectations are ridiculous. And you might look at this company, you might say, wait a minute, Tevis, this is ridiculous, man. Like this company has grown 70% in the past like year to date. Keep in mind that even at today's valuation, this is still like a 0.6 price to earnings growth ratio. So it is still valued fairly cheaply relative to the actual growth numbers that they're putting up. And these growth numbers, I actually have this in a scheduled post that is going to drop in a couple of days. But I was looking at the analyst expectations for HIMS, and if there's interest, I'll do a HIMS earnings prediction video. But essentially, this is a company similar to SoFi that always triple beats their numbers. And so 90% growth rate year over year is kind of a sandbag number. My expectation is around 490 million for revenue, which brings their growth rate to about 100% year over year. So we're going to see how that works, but it sort of makes sense when you look at all the numbers together. And yeah, I definitely will. I'm actually, funny enough, I'm going to do a podcast with Manuel tomorrow, just the HIMS weekly podcast. So we're going to get more news there. I haven't chatted with Manuel in like a month. So that should be fun.
Weekly. But it happens. You know, in HIMS it's largely, I mean, it moves so fast. And so it's one of those things where I'm even surprised as somebody that held HIMS. I ended up having some extra money come into the market and I'm like, oh man, I'm going to get to buy HIMS at 25. This is great. And by the time the money settled and was ready there, it was like $28. I'm like, I don't care. I'm buying it. And now here we are in the 40s, all-time high. And could we, do you think that we're going to be in the 20s again, Tevis, on HIMS?
We could.
Yeah, it's pretty likely, you know, that it touches at least at some point in some narrative. 30s almost for sure. Like it's the most volatile stock I own. And, you know, I own Palantir. Now, did you catch Palantir earnings at all?
No.
Well, they did okay. Can you throw this up?
Yes, sir.
Oh, I don't know if I shared the whole window or just the tab. Let me redo that. Share screen window. There we go. That'll be better. All right. So obviously stock price is not the same as the actual company, but when you have a move that's up like 30% in the past 5 days, usually they're cooking. And that's the case here with Palantir. You know, this is an all-time high. If you had asked me a year ago, it's like, hey, would Palantir be trading above $100? I would laugh at you and just say, you're absolutely ridiculous. No. And I'm a huge bull. This is my largest position. A lot of earnings, guys, you can look at numbers and be like, oh, great numbers or bad numbers. Why is the stock moving the other direction? Almost all of it has to do with expectations. So Palantir going in, expectations keep getting a little bit higher and higher. There was one number I was a little bit concerned with on Palantir. That's an impact from SARs, which are basically stock-based compensation units that have been granted to Palantir employees that have been there, a little while, based on stock price action. These were initially written up when the stock was trading in the 20s. And if the stock broke above the 50s, then we knew that these would be exercised. And of course, here we are in the hundreds. So the market was expecting growth, but they was expecting, I believe, about 27% revenue growth year over year. And we got a lot better than that. We actually ended up with 37% growth year over year. I was just hoping, and I was bullish. I was like, I think it'll be right around 30%. And that's really important for the narrative of it being a very fast growth name. Now, if you look at the multiples, Palantir is incredibly expensive, but part of it is it's expensive for a reason. It's, I think, a very differentiated AI play, and you can see some of this in the numbers too, like 99% over year U.S. commercial deal value. And you see, this is the U.S. commercial slide. This is their strongest basis, although government actually grew by 40% year over year, which is pretty amazing for government products. But international is actually doing the opposite. It's not growing, and in fact, it retracted slightly quarter over quarter. That happened. But U.S. commercial revenue up 64% year over year. Customer count went up as well. And we did see, this is the number that I was concerned with, that with the SAR hit, the net income really tanked versus where it would be without that hit. One thing I really liked, by the way, about Palantir, I'll show this. They have a lot of, kind of slides that you can just typically skip past. Their first slide that was more than just numbers, instead of them saying, oh, boohoo, the SARS and there's a lot of SBC as a result, they celebrate that. This is going to their employees. Some are certainly at the top, but a lot of those forward deployed engineers and guys that are on the ground. So I really like that touch. It's a minor thing, but it's not something that they need to be sad about. You heard of the rule of 40, Tevis?
Yeah, I have.
How about the rule of 81?
Is that what they got? Yeah.
Yeah. So rule of 40, it's EBITDA margin and growth rate, annual year over year growth rate as well. And so Palantir is just killing it. Their margins are very, very high. They've accelerated as far as their growth rate, above and beyond even my expectations. And this is a slide that they've not always published, but they have been for maybe a year and a half. And for SaaS companies, it's really important that they hit at least this rule of 40. For the market, that's basically when it's like, okay, yeah, this is a quality name that's doing well, that has a great story. If it's under that, they tend to not give it much of a multiple. And so one of the things that Jack Dorsey has been hammering for a block is like, hey, we're going to hit the rule of 40 in like a couple of years. And the market doesn't seem to be real excited about that, especially when you have a name like Palantir that's doing this. Robinhood is going to be even higher than this. HIMS is another names that they don't put out the rule of 40. They probably should, because honestly, they're a lot like a SaaS in a lot of things, but they're absolutely smashing it. There's the revenue growth in the US, 52% year over year overall. I wanted to show one other slide that I thought was really important. So you can see here the acceleration and the adjusted operating income. This excludes SBC, so that SARS hit is not displayed there, but it's a massive jump up. This right here was one of those most important things for me. So commercial count, since it's a business to business company, it has a larger sales cycle or a longer sales cycle. It's been shortened a lot because of the way that they've deployed AIP through boot camps, and they've gotten a lot of interest in that. And so we had this huge bump up in customer count last year, and then that began to tail off. And so we had 19% quarter over quarter to 13% to 9%. That's U.S. commercial. Actually, here overall customer count. This is better. So 11% year over year to 7% to 6%. This is not year over year. This is sequential, by the way. And then here was the first acceleration we've had in a little while. So my concern is sometimes in groundbreaking technology, what you have is a whole bunch of early adopters that come in, and then you'll have a bit of a valley and a pause, and then you'll have the late adopters that realize, oh, we've been trying other products, they don't work. We thought that we could make whatever innovation work and be fine, but our competition is killing us. And then those late adopters, it can take sometimes years before they realize what they're missing out on. It seems like we're not in that valley, at least not yet, because they're really accelerating, and they guided for just under 30% growth over this next year. Palantir also has a tendency, like some of the names we mentioned, to sandbag their growth. And so when they say, that they're going to grow 29%, 29 something percent over the next year, they're probably going to grow more like 33, 34, 35. They usually beat guidance. And I expect actually 35% growth. So really, really fantastic numbers. Is the multiple justified? I don't know. I'm just a shareholder. Don't ask me. But would I guess you can ask me this. Would I be buying Palantir here? No. No, I did take some gains, and I do not regret that, even though the gains were about $65 a share. When you have a company that is just such a large position of your portfolio, and you're like, hey, it's time to lock some of that in, rotate it into another name. In my case, mostly HIMS, which worked out pretty well. You can, even when you see the stock just rocket up like this, you don't have to be like, oh man, I really missed out. Yeah, I missed out on some money. It happens. But for peace of mind, it really did a lot for me. So I don't mind it at all. Oh yeah. And Sam's solid. Good point. 120% net dollar retention. Now, net dollar retention, this is an important measure for business to business companies. What this measures, and each company does it a little bit different. Palantir basically says, hey, for the first year that you're with us, you're a new client. If you adopt and add more in that first year, we're not going to count that as net dollar retention. But beyond that first year, if, for instance, like they're monetizing AIP, which they really are doing now, then let's say that you renew your contract, or you expand it, or you scale it out, and you're paying like 25, 30% more. Well, then the net dollar retention on that would be that 25 or 30%. And so this basically is growth that comes from existing customers. And so they hit 37% year over year growth, but 20% of that 37% were from older existing clients, because they have a really differentiated, sticky product that scales across entire businesses. There's very little that it cannot do. There are some copycats out there that can do this piece and that piece, but there's no comprehensive solution like Palantir. So it's a unicorn as far as I'm concerned. And the nice thing is I've taken profits, so I don't have to worry about like how high or how low it's getting. I'm just like, hey, I'm just here for it, man. So any regrets on selling this name?
I mean, it could be a company that sells freaking dog food, and if it goes from 10 to 100, of course I'll regret it.
No, you sold it at like 85 or 90, right? Something like that.
Something like that. Yeah, I like, dude, I don't. It's funny because when this thing was at like 70, a good friend of mine was like, "Oh, time to short Palantir." I was like, "Dude, I ain't." And I think I said this before. I was like, "I ain't touching that thing either way. Whether to buy at 70 or to sell at 70, like, I can't. It's just finger in the air, guess where the wind is going." And yeah, it increased by 23% after hours. And I saw this thing on X, which I found funny. And the post is basically saying, so a $39 million beat on revenue increases the company's value by $39 billion. And I was like, Palantir, baby.
And I mean, the market does that. So, over time, will they catch up to their multiple? It'll take a long time. They're extremely differentiated, extremely well executed, extremely expensive. So,
okay, so let's just stick with that for a second, right? Because I mean, you said yourself, okay, it'll take a long time for them to catch up to their multiple, and if they're already $236 billion today, for the price to remain at $103, there has to be buyers that still buy it at $103. Like, are those people completely and utterly screwed or left holding a bag because all of their gains for the next 3 years have already been had?
Well, you were saying that when it was $20. So
that's what I'm saying. I'm not touching it with a 10-foot pole either direction, but I'm just like, there still has to be buyers up here.
Mm-hmm. Yeah, what's interesting too is a lot of the buyers, I think, have been institutions. The way that they used to talk about Palantir was, this is not an interesting company. They're charlatans. It's a black box. You can't really understand what they're doing. No differentiation. Yeah, Google or Microsoft are going to eat these people alive. And then there's been a fundamental shift, like a lot of acceleration. LLMs have been part of it too, but it was even funny. So 2 years ago, when LLMs really were first launched and people were talking about it, the market was rewarding Palantir a bit, but they were criticizing it. And they're saying, dude, you idiots, you didn't build an LLM of your own. What are you doing? And the whole time, Alex Karp was saying, LLMs are a commodity.
Yeah.
We don't want to be in a commodity business. What we're doing is basically making it so that LLM does more than just quote poetry at you. And so at the time, the market really didn't understand that. And I think now, especially with the DeepSeek stuff, they realize yet again, Alex Karp was freaking right. He's right so often. And there's other companies that they're like, oh yeah, this one's a competitor. Your Microsoft Fabric came out, and it's like, Fabric's not good. It does some of the things that Palantir does, but not a lot. Snowflake has like a little bit of overlap, not as much as people are. They're trying to figure out a competitor. They're just like, okay, we can't find a competitor. The Palantir's own clients getting paid nothing to do this. They're at the point now where they're just pounding the table on how good Palantir is. In the middle of their earnings call, they call out Palantir and they're being like, yeah, because of Palantir technology, we have all these awesome things that are happening. And the market wants a piece of that. And the great thing is, this is such a heavy retail name that the institutions have come in. Part of it was, S&P 500 and NASDAQ, so they had to buy, but they also want to buy. And so a lot of that has been institutions. There certainly are some retail folks that, at some point, I don't know if we're here yet or not, but at some point, Palantir will need to catch up to its valuation. And it'll probably, I don't think it's going to like crash down and go to $20 a share like people are saying. Because I mean, like at that point, Tevis, you'd even be buying it. And I don't mean that like negatively. I just like
no. There would be swarms of buyers at tranches much higher than 20.
Oh yeah, like 50s. I had some people messaging me and they're like, hey, if it goes down to 55 on this earnings, I'm buying the freaking dip. Like a lot of it. And I was like, dude, I sold some Palantir at 65. It's like, if it goes to 55 on good results, I'm going to buy that up. Even though even there, the valuation looks stretched. I'm like, dude, this is a unicorn company. I'm not going to buy it here. I already have a lot. Even if I didn't, I personally wouldn't buy it.
Well, I mean, look, I think that, and this is a funny comment to me because, hindsight is 2020 when it comes to the market, because you can say now that it's 100, that it was a steal back at 7, but there was people selling at 7. I bought it at 7. I sold it when I doubled up basically, but there was people selling me those shares at 7 because they thought it was going to 3 or they thought it was going to 0. And now you would give an arm and a leg to buy it at 7 when it's at 100. But the reality is that if it fell from 100 down to 7 tomorrow, you say you would buy the dip, but there would be some FUD out there. People would say, hey, this and that is happening. And probably a lot of people would get spooked out and not even touch it at 7 because they'd say, hey, let's let the, rubble clear out and let's see if it goes to $3 or let's see if it goes back to $20 before I jump in. And so human emotion is going to be your biggest enemy there.
Yeah. And we're seeing that on NVIDIA, and Tanner's in the chat. He can confirm this, that, a lot of people are like, oh man, NVIDIA is trading at 140. If it goes down to 120, I'm going to buy it. When DeepSeek came out, they're like, well, maybe I'll wait for 100. Maybe I'll just wait and see, it happens. But the best thing that you can do is, if it's a quality company and you're like, hey, I want an opportunity in this, you don't have to hit the bottom. You might look dumb for a little bit. Let's say NVIDIA falls back to, you buy it here and it falls back to 100. Okay, well, you missed the bottom. You're underwater for a little bit, but what do you think it's going to be at in a year? I think you'll be okay with the buy here. Palantir, if it fell to 55, same thing. HIMS, if it goes back to $30, people buy it and it falls down to 25. They're like, oh man, I really messed up.
You can say the exact same thing with every single stock in the market, because for every seller, there's a buyer. For every buyer, there's a seller. You can say it for HIMS. If I buy it at $42 tomorrow and it goes to 100, you can say, oh my God, what a steal it was. Or other people will say, holy crap, that's overvalued. You can say it for AMD right now. AMD is at 110 and people are like, holy crap, like look at the fundamentals. This is a great business. And then other people will say, oh, Lisa's not providing any guidance, this and that. Like any company in the market, you can find both sides of that argument to justify why it's trading there. So
and on AMD, maybe we'll touch on that. Neither of us hold AMD. This is PayPal, but
can we stick on the Palantir point before we go to PayPal?
Yeah, we can.
So let me just pull that down. I wanted to just bring up like one last point around Palantir. So, but before I do that, I want to talk a little bit about that stock-based compensation because I saw it was a huge spike this time around. Is that like a yearly wrap up? Like that's the price for the whole year reflecting, and it's only going to be a one-time hit, or is that like are we back on the uptrend for SBC?
Yeah, no, that's the one-time hit. SBC is always going to be behind this name. They have done and started buybacks. They have like 5 billion in cash and no debt.
Yeah.
But the one thing that's you could like nitpick and say, well, I don't like this and I don't like that. The one thing that's a little bit challenging at this valuation is that all of a sudden, like those buybacks, they mean nothing at this point. Like stock-based compensation is always going to be large in this name. And if it was trading at like $30 a share, their buybacks would look, pretty good. It wouldn't cover all the SBC completely, but yeah, here at 100, it does almost nothing. So,
Is there any chance they dilute, like they do another raise?
no, zero chance.
Okay. I wanted to bring up this comment because I agree with it. And I'd say, like you asked me, do you regret Palantir? I would say, from a stock perspective, any stock that goes up that much that I missed, I would regret. But from an actual fundamental business perspective, I think the Palantir and AI was less of a regret for me than this right here. I saw Elon posting about Alex Karp is awesome, and now Doge is wanting to clean up. And I just think that with this new administration and the previous ties to the PayPal mafia and Palantir in general, that Palantir is really, really going to cozy up with those government contracts in a big way. And that's the piece that I think I would regret more from a fundamental perspective as a shareholder than even the AI piece itself, because this administration is going to be in power for a while. And they're pretty serious about that mandate, which is, what we've seen over the first 2 weeks of that new term.
Yeah, but I mean that's the challenge, right? Is that a year ago, if I was like, hey, I'm from the future, and yeah, Doge is considering using Palantir technology, you'd be like, Dogecoin, what in the world are you talking about? Like, it would make no sense, right? So things can change, and you can't be in every stock. And if it would have been a mistake for you, like you would have made money, it would have been great, but like the whole way up, you thought Palantir's valuation was stretched at $20. Obviously, in hindsight, no, especially with the acceleration. But at 40, you would have been like, oh man, I gotta sell, or 50, I really freaking gotta sell. And I did some of that. Like I sold my leaps at like 40, $45, made a lot of money from that, took some profits at 65. Same thing for me is there's a point where you get to where you're like, hey, this valuation is extreme. I can't just sit there and let it ride. Now, some people can. You want to let your winners run, but at a certain point, it's okay to tuck profits too and invest in something else that helps you sleep better at night.
Yeah, I think that's the whole thing, right? Like, it doesn't matter what I think, so long as the market, like, it matters what the market thinks, because the market can disagree with me, and then that's that. But I just think that, anyways, like investors are buying it for different reasons, and I can understand that because I'm a Tesla investor. Tesla missed on every single metric there is to miss, and it went up because Elon was like, the future looks really freaking bright, And I mean, if you take out stock, I saw this post yesterday around Palantir, and it said, if you take out stock comp from income, you have a stock trading at over 700 times earnings. Like everybody knows it's stretched, but the people who are buying it are not looking at those traditional valuation metrics. And in the future, like in time, the market is either going to prove those people right and reward them with more gains, or they're going to be proven wrong, and it's going to come back down to earth. And that's fine, because there's different types of investors that invest for different goals. And so, yeah.
So let's talk AMD. That's been one that, I see a lot of my friends and fellow investors talking about AMD. I think Lisa Su's a really good CEO, and AMD has been just hit and hit and hit. So we'll go ahead and throw this up if you don't mind.
And for people that are watching, you can throw all of your questions in the chat, and I'll bookmark them, and we'll address them in the last 10 minutes of the show.
So this isn't a name we'll talk about like in deep detail, just because I've not dug through all the slides. Just looked at top line numbers. And AMD, it was up a little bit. Initially, it popped because, hey, look here. They keep beating their numbers, by a little bit. It's not massive beats, but they're not by any means putting up bad numbers. The thing that the market didn't like at all is that they missed on data center revenue. And that's been a part of the thesis. It's been a part of the story as well. And it was a pretty decent miss. Now, I don't know the full reasons for the miss. I need to dig through the slides and see that. It's one that, I've got some friends that are like, hey, you really need to look through. And I look forward to digging through the earnings. But, it is a concern that they're not, like, these are not like what NVIDIA is doing. This maybe 3 years ago, you'd look at AMD and like, yeah, they're a close competitor, a near peer to NVIDIA. And now nobody thinks of AMD that way. They've kind of fallen behind on some things. There's been some challenges along the way. And the finances, like they look, good. You look, they're growing 17.5% year. No, that's September's number. So let's see. Yeah, here's the expected and reported. And so, yeah. Anything about AMD do you find compelling, or is that just your relative that's like, hey, I'm thinking about buying AMD?
No, I would say it's really strange. And granted, this is me just looking at the top line numbers for AMD. I'm not by any stretch of the imagination a pro at looking at AMD numbers. I mean, I'm looking at their financials. They're up on my screen right now, up 12% on revenue, 14% on profit. I think the valuation is the most compelling thing about AMD, the fact that they haven't really partaken in that massive rally that, NVIDIA has. Of course, if you look on a 5-year view, they definitely have. But if you look on a 1-year or a 2-year view, it's a little bit of a different story. But I just think that, I don't know, like I understand both sides of the argument to say, hey, this is an undervalued play. But then my spidey senses would be tingling to be like, hey, why is this undervalued? Because it's in a really sexy vertical right now that has a lot of attention. So what's being missed here? Is it that data center segment? Is it the gaming segment, the client segment of their business? And really, like, what is the thing that is not? And then you have Lisa Su sort of adding a little bit of fuel to that fire, being like, hey, we're not going to do guidance for this year. and so I'm like, okay, maybe I should be a little bit careful here, because if it looks too good to be true, sometimes it is too good to be true in the market. Now, that might be a really stupid thing to say, because this might be the most undervalued. And like similar to our conversation 15 minutes ago, like this might be a Palantir at $7 conversation, and you're wary to get in. But, I made a post today and I said, look, they double beat and they're down 10%. Cheap can always get cheaper, but like at which price is this too good to pass up? I don't know. If you ask Jeremy from Financial Education, he would say $20 ago. If you ask somebody else, they would say, hey, stay away and buy NVIDIA instead.
Throw up Andrew's comment on, is it smart to buy something that continues to fall? Just a little bit above that one. Yeah, this is a question that, you have to decide as an investor for yourself. I think that there are times when it absolutely makes sense, and there's times when it's like, no, we can just wait for a bottoming. It's called catching a falling knife. Like, don't catch falling knives. It depends on the company. It depends on the reason why it's falling. Like sometimes stocks just get caught up in a narrative that you're like, okay, this is silly. You have long-term perspective. You know what the business is worth and what they're doing. And it can make sense to try to catch that. Other times it's like, not real clear here. And AMD is one of those where I'm like, I don't know where the bottom is. I'm not sure, why it's the market is seeing it this way. I think that probably the sell-off is a little bit ridiculous given the numbers that they have, and it just like on one thing, but it's still caught up in this narrative, and it could be a lot longer for it. I think it's a quality name, but frankly, if I was looking and I had a binary choice of buy NVIDIA and initiate a position or buy AMD and initiate a position, NVIDIA every day, all day at the current valuation and price.
So the thing that I would say to Andrew is like, you cannot buy conviction. You have to build it on your own by doing your own research, actually going to the, and I know it sucks sometimes that you have to read. You have to go into the earnings reports and you have to read, and you have to do some Googling on your own and try to figure out the space that they play in. And like, that's how you get an edge, because I mean, yes, you don't catch a falling knife, but in the case of SoFi, that's what I did for 3 years. My hands were freaking bloody by the end of that ordeal. But because I had the conviction and nobody could really shake me from that conviction because I knew what I held and I knew the potential there. And so if AMD is that for you and you're like, this is so crazy that the market can't see what I see, then you go ahead and buy that falling knife. And even if it gets cheaper, it's fine because you know that the fundamental business is solid, right? So, um, yes, the rule is don't catch a falling knife, but at the same time, like if you know what you hold, then go for it. You know, if HIMS fell to $5 tomorrow, I'd be buying that, hand over fist. If nothing in the story changed, if the story changed, then that's a different matter.
So on that, throw out this slide for me, and we'll talk about PayPal just a little bit. Now, you mentioned you were thinking about buying PayPal, and you decided not to. I know some people that got out of PayPal. I know some people that bought in. There was a lot of good, but there was also a lot that was not good with PayPal. They reported this morning. Let's see. Here's the price. It's actually down. This is on the year-to-date basis, so it's down year-to-date by about 10%. And yeah, there's a reason. I think probably the sell-off is aggressive. It's unwarranted. And we see just kind of like AMD, they beat a little bit on revenue. They beat a little bit on EPS, actually a little bit better than expected. Free cash flow looked fantastic. That was one of those big highlights. They authorized another $15 billion in buybacks, said that they'd buy back $6 billion in next year, which was not expected. New all-time highs, monthly actives. Transaction margin is up as well. And guidance is a little bit softer. And on guidance, that's one of two big issues. I was talking with Tanner earlier on this, and he's evaluating where he's at with PayPal, and I'll let him share with where he's at on that on his own stream. But
yeah,
last year,
thanks for the invite, by the way, this morning for the PayPal stream you guys did. I saw that. I was like, oh, these guys didn't invite me.
That's right. I forget that you're a big shareholder, and we need to do that next time.
I'm totally messy. I wouldn't have woken up at 8 a.m. for that shit, bro.
Okay, so the call itself was not good. It was not numbers we'll look at just kind of briefly, but the call itself, I would give them like a C-. Like they passed, but not very well at all. They have an investor day that's coming up here at the end of February, and I think that they just thought, with some of the things that investors are really looking at, we're going to tell them that anyway in a few weeks, so we don't really need to tell them now. That's a mistake. You can't do that. Last year, Alex Chriss characterized it as a transition year. Never a fun thing, but it happens with massive companies that are turning around. And this year feels like another transition year. So one transition year, a lot of people can stomach and say, hey, it's probably worth the wait. Two is a bigger ask. Now, PayPal does guide very, very conservatively. That's part of the issue. I think that they're even more conservative than SoFi. I mean, arguably, they're both overly conservative. And you can see here, so this year-over-year growth, transaction margin dollar, basically net income, let's look at the full numbers. 4 to 5% growth, and basically what are net dollars. Non-GAAP, non-transaction operating margin, that doesn't matter too much, but non-GAAP EPS, that's going up 6 to 10% growth. That's not like super exciting. Free cash flow, this is actually phenomenal right here. 6 billion to 7 billion. They'll probably hit north of 7 billion. Share repurchase, 6 billion. CapEx, they're spending a little bit more aggressively for those products. But that's the question is, a year ago, Alex Chriss launched a lot of products, first look products, and was like, hey, this is the roadmap. This is what we're doing. This year is a transition year. It'll take a while. We won't guide for these until there's points on the board. We're here a year later, and they still kind of say the same thing and gave us more information on the products last quarter than they did this quarter. And again, I don't think they're hiding things. They're a lot more transparent under Alex Chriss than they were under Dan Schulman. But it's tough to post this number and also not really give context. So I'll give one reason why the revenue number especially is not as exciting as you might hope it to be. And a lot of that is that Braintree, which is their back-end white label payment service provider product, which, it's kind of a commodity. I would say that it is. It's one aspect of PayPal business that is. They, under Dan Schulman, were like, hey, growth at all costs, even if it doesn't translate to the bottom line. And obviously that was a terrible strategy. And so Alex Chriss has shifted that. And one of the conversations they're having with their larger merchants is we'll take less of a percentage of your revenue processed on this in exchange for a bit higher margins. And so that's why free cash flow is looking good. That's why transaction margin dollar is looking pretty decent as well. But the reality is that came with a 5% headwind to their revenue growth. So it's tough. Yes, let's will it tough. But well, so that's the thing is the guidance was not inspiring. Some numbers were really freaking good, and we'll look at a couple of those.
Did they issue guidance or did they not issue guidance at all?
They issued guidance. This is guidance right here. But it's not like you look at this and you're like, okay, free cash flow and repurchase, that's great. EPS growth is okay. And the rest is really not good at all. And is it warranted, given the shift in strategy with Brain2? I think so. But, a lot of people don't want to hold through that. Now, one of those things, let me go to another post. So as far as valuation, okay, I had it just a second. Here we go. So it collapsed. It's trading in the 70s again, which is like, okay, that's not fun. I don't think that this is warranted. I think it should have been flat to slightly down. So I do plan to add some here. And if you look at it, purely from a valuation standpoint, you're like, okay, this is ridiculous. So they've increased their free cash flow by 40% year over year. Under Dan Schulman, free cash flow is flat. I'm a big free cash flow guy, so this is important. Good for an 8.38% free cash flow yield. They're trading at a 12 times price to free cash flow basis. And they're also buying back 7.5% of their stock at this valuation each year. That's a setup for basically it's hard to see, if I buy PayPal today, that in a year I'll be like, oh man, I lost a bunch of money on this. That's not going to happen with the conservative guidance with the team they have in place and with this, happening on the back end with free cash flow and buying back. But are we going to see 140, 160, 180 this year? Maybe 140, maybe. That's not the most exciting thing ever. I still do think that there's a roadmap where, and I think it's likely we'll know more from the investor day that they do get to all-time highs by 2030, which is frankly a remarkable recovery. But this year, I don't think is going to be super exciting to be a shareholder. The investor day could change a lot of minds. I think that they're going to do a good job with that, and they need to, honestly, at this point. They've kind of painted themselves in the corner, and if on investor day they come out something similar with what Dan Schulman did in 2021, where they're like, hey, let's focus mostly on what we did in the past. Let's throw out some charts here that kind of show TAM, and that's about it. And you connect the dots, and we're going to be amazing. That's going to suck. But I don't think that they're going to do that. This is a very different team. So it's one of those that it fell a lot. I was like, oh man, if it does this on really strong earnings, I'll buy a lot. I'm going to buy slowly just because the earnings were not that good. The earnings call was very uninspiring. And there's a lot of unknowns that they really needed to talk about. The advertising business, not one mentioned, not one analyst even asked about it. And I'm like, I know we have investor day. I know that they're going to talk about it. This is a very important piece of PayPal's future.
So real quick, just before I chime in, when is Investor Day, Roy, for everybody here?
End of February. Let's see here. 25th, February 25th.
The day after him's earnings, everybody.
Yeah.
That's when I've never seen Roy this offended.
No, I mean, companies that I hold and I like if there's something I don't like, I mean, you guys have seen it with SoFi. I don't hold back. I'm not going to sugarcoat and be like, oh no, if I say a comment, it might dip slightly and no. So, all right. Yeah. But honestly, it feels like the biggest risk with PayPal right now at this price is opportunity cost. Could it be an opportunity cost? It absolutely could be. But if you buy PayPal now, are you going to be like, wow, I'm really underwater in a year's time? It's very unlikely. It's very unlikely. So I'll buy some.
I find it really interesting. And I think, maybe this is recency bias, but I think you're also, kind of optimistic to say that this ends the year at, in the 140s, because that would be like a double up year over, in 2025, the stock increased 100% basically, or at least from here near 100%. And it just if that's what we're looking at, like, let me put my whole portfolio into PayPal, because I don't think, like, I mean, what, Alex Chris has been CEO now. This is his third earnings report that he's put out.
This would be fifth, but like one of them was like basically he wasn't there the whole
Yeah,
time and
so
just
really
had
fourth, right?
yeah, yeah.
And, like, the stock has done well. Like, it's gone from, I don't know, from 60 to 80, I guess, where it is now. I mean, it was 90, sure. So it's increased 50% in the year that he's been there. Like, there's nothing that really gets me, like, there's no number that I can latch onto to say, okay, they're going to double that stock performance in the next year over the next 4 quarters, because he's already done four and it's gone from 60 to 90, let's say, was the peak, but now it's 80. I think the most exciting thing for me, because, like, look, PayPal is one of those things where I think you nailed it with regards to the opportunity cost. Like, it's just not that exciting to me to sit beside other companies that I have, like Hims or even SoFi to some degree, that's still putting out new product lines, innovating, whatnot. But I think it's going to be like a steady Eddie stock that, just puts up consistent numbers, keeps beating, does their work slowly in the background. The thing that was most exciting to me about this PayPal report was absolutely them announcing new $15 billion of buyback authorization. Like, on top of the 4.8 billion that they have already remaining, that's 20 billion in buyback. I mean, like, the market cap of this company is 80 billion, guys.
Yeah.
Like, what? That's the thing where it's like, oh my God, this isn't like, if the goal was to not lose money, then PayPal would be a really great candidate. But if the goal is like, hey, let's do the Christmas challenge and let's see who gets the most percentage, I would not pick PayPal. You know what I'm saying? Like, it's one of those.
Exactly. No, I agree with you. And like, it's been de-risked at this point. Like, there's always risk with any stock, but it's when you're buying back over the next 3 years, 25% of your market cap, and you print money and that's accelerating. Yeah. So here's what can get them to 140 this year, is the market is looking at them and like, oh, they're done growing. Well, part of that is that shift over this year in the way that they're monetizing and thinking about Braintree and also Venmo. It's meaning margins are actually ticking up, which is really good for free cash flow. And we'll see that also tick up. But when and if those first look products, so we're talking Fastlane mostly, and the two advertising products really begin to scale and be monetized, that zero of that is priced in by anybody, like not even myself, nobody. Part of that is the way that they freaking guided and the way that they handled this earnings call. So if we in the investor day, if we get a nice look at some of these and it's like, okay, these are actually really starting to ramp up and become exciting, or they're talking about advertising beginning to hit the bottom line towards the end of this year, or Fastlane, or that they're switching their payment rails to PayUSD. There's a whole bunch of different pieces out there. They really just need one to catch the market and really begin to accelerate there. But we have no indication that that will happen at all from PayPal themselves. They're waiting for Investor Day. That's critical that they guide on these things and not just say, well, we'll talk about it when it starts happening. It's like, that's not good enough. So I understand people that are saying, you know what, I'm going to move on. I get that. Myself, I'm like, I'm going to buy slowly. And if during Investor Day, I'm like, okay, there's the roadmap, which Alex Chris, he delivers again and again and again on what he says he's going to do. But they talk about what these products are already doing, the early reads, and then they're like, hey, this is where we're going in the next 5 years. Like, okay, great. They got a roadmap. I think it's going to work. I'll buy heavier then.
Yeah, I just think that, like, I mean, my thesis all along for PayPal was a valuation play, that, hey, it was just undervalued relative to where it should be. But in reality, like, the growth rates are definitely not. Yeah, sure, maybe Braintree and maybe some of the other segments aside from the flagship product line. But overall, I think it's just a company that appeals to a different type of investor, like, the value investors, or, I know it doesn't pay a dividend, but the dividend investor, like that kind of cohort, I feel like would appreciate PayPal more. That looks at free cash flow, that looks at the valuation metrics, the traditional metrics. I think, like, it's hard to fathom having an investor who has a large allocation in a company like Hims or Robinhood and then also in a company like PayPal, because the examples, the first examples are growing triple digits, and then PayPal is growing single digits, and you're like, how can you really, like, what is your investing methodology?
But they're priced like that too. So I just like market leaders that are able to, continue to maintain and grow and lead in innovation. PayPal is more of a turnaround play. I think Alex Chris is a really good CEO, but he's got to continue to execute on what he's built out. He's got some great ideas, but they actually need to see some points. So one other name that we should at least touch slightly. Did you? Can you talk Robinhood Roy sports betting update? Yeah, actually, that's something that maybe I should talk about before we talk about just touch Google a little bit. Robinhood announced, I think it was yesterday, that hey, sports betting is live, and you can now bet on Super Bowl winners and within the app itself. And they did kind of a slow rollout, and now we kind of see why they did a slow rollout. They said they rolled it out to about 1% of people. Today, they were basically ordered to pull that product back. Let me pull up the actual.
Which is interesting because, just go on Robinhood on their X account, because they respond to the CFTC request. And they were like, we're kind of blindsided by this because we were in constant communication with them the whole time. So it's just a bad look, I think, for Robinhood. But I would imagine I'd be fuming if I was working at the company, because fuming at the CFTC, I mean.
Yeah, so here they are, Robinhood Comms. The Commodity Futures Trading Commission, CFTC, has formally requested that Robinhood derivatives not permit customers to access sports event contracts. We don't know exactly why. They didn't go into the details of that. But while we continue to work with this organization to understand their concerns, we are suspending the rollout of Pro Football Championship Market. We've already rolled this product out to approximately 1%. They basically say what can happen there. We are disappointed by this outcome, especially given that we had been in regular communication with the CFTC about our intent and plans to offer this product. We will continue to collaborate with the CFTC as we work out to roll out a more comprehensive event contracts platform later this year. And it's frustrating. It sucks for Robinhood. It's nice too that they're saying, hey, we're going to roll out a more comprehensive platform. That's pretty cool. I don't know if they're building that out themselves, if they're partnering with Kalshi like they did with this, or what exactly. But at least for this was taken away. And I don't mind companies, especially with this kind of offering, which is just a short-term basis, and then it's kind of done, to go after the market aggressively. But, it seems like that they're trying to be in constant contact and say, hey, this is what we're doing. Let us know if it's a no-go. And everything was good, thumbs up. And it's actually, never mind. So I don't know if we'll ever figure out why that is. But it's a little bit frustrating. But the nice thing is, we're Robinhood is a stock. I always oh man, it's going to probably go down 3 or 4%, which is silly because this is such a small amount of revenue that nobody had baked into their estimates because we didn't even know they were doing this. But no, the market was whatever. But this kind of headlines is what I would expect under the prior administration, not this one. So that was kind of a little shock there. All right. So Google, did you see Google results at all?
I saw the response to Google results. So yeah, let's do some questions. I have about 6 or 7 bookmarked here. If you guys want to ask questions, then go ahead and ask them, and I'll bookmark them, and we'll try to get to as many before we end this stream. Let's start with Google.
Yeah, I've not dug through. That's one like AMD that I don't hold, that I'm watching from the sidelines. A year ago, I was very bearish on Google. Very. A lot of its culture and leadership. There were some other factors too that I was just wrong on, honestly. I think their team that's doing Gemini is doing very, very well. Google is down 7.34% after hours, so it's 192. Still, if you look at that over the year to date, it's still up just a little bit year to date, but it's up 43% over the last year. So they're doing well. One of the big concerns that I saw noted by many people was a CapEx spend. That it, on one hand, probably Tanner, you're excited, CapEx spend is all right, that means NVIDIA to the moon, and it probably does. But yeah, they're spending a lot of money. I think that they're still probably cheap as well, but I just don't have a conviction around the culture and around the leadership of the company, so I'm not getting in. But it was kind of interesting to see. I figured that Google would report that they would do fine as far as their earnings, and their earnings were fine. But this quarter more than any is really about guidance. That how you're guiding and how you're talking about over this next year is doubly important. For one, you're guiding for the full year, which a lot of companies had not guided anything for this year at all before. You're doing it under a new administration, which gives you a very different look as far as what to expect with some companies like Google.
Yeah. So Google missed on revenue. The CapEx guidance was way above estimates. They missed on cloud growth. And Microsoft missed on cloud growth too. I think there was a comment here around like Amazon eating their lunch. This is one thing I really found interesting with regards to Google. Looking through here, let me throw this up. We do see and have been seeing very strong demand for our AI products in the fourth quarter in 2024. And we exited the year with more demand than we had available capacity. So we're in a tight supply-demand situation, working very hard to bring more capacity online. As I mentioned, we've increased investment in CapEx in 24, continue to increase in 25, and we'll bring more capacity throughout the year. And so, you could get mad about them missing in revenue and them missing having higher CapEx guidance, like more expenditures. But I think that context is important because, like Tanner says here, they are supply constrained. The demand for AI is very large, and I think that if you read through the lines, that is a very bullish thing for Google.
Yeah, and I think so too. Like, this is a good thing long term. I'm still neutral on Google until I see something different from their culture and their leadership. That's a huge part of why and how I invest. But if I didn't care about those things at all, and I was looking at Google today, I'd be like, okay, this is a good opportunity to buy because they are thinking about the future. And yes, they're in a commodity business, and I think the market realizes that too, which is maybe part of the reason why they're like, oh, commodity, or a lot of CapEx expenditures for a commodity. But if you're a hyperscaler, if you're a massive company with a lot of tentacles in different groups and industries, you can take a commodity where you don't have like super high margins and make an incredible amount of money simply just because of your size and scale. And that's exactly what I think Google, Amazon, and others are positioned to do. So, I've not, like I said, dug all the way through that report. I've not even looked at the report. I've just looked at the headlines and a couple of remarks. But at least I don't see anything concerning to me. Look
at this monster. YouTube ad revenue just crossed 10 billion in quarterly ads revenue. Google bought YouTube for 1.75 billion in 2006. And talking about ad revenue, shall we give the people a mini ad? I've promised one per stream. Here you go. And I'm sorry. Okay. So everybody, at least on my stream, unfortunately got an ad. Thank you for the 99 cents I probably got from that ad. And now, Roy, we can go to our next question.
Yeah, hopefully you guys pop over to my stream where I'm not doing that to you. Just kidding. But maybe I'll have to do that next time. We'll get in sync one time for Btlg. If we go over an hour, we'll do an ad. We'll do it that way maybe. Next time, remind me.
That's what I'm telling. Like, I am promising one ad per stream, and these streams go over an hour. So what TV show do you watch that has only one single 30-second commercial an hour? I'll wait.
Yeah.
All right. Let's see. Did you buy NVIDIA?
No. It's on. I have a list of now 6 names that one of those will likely make a new position, and I have some money that is ready to do that at this point. I was like, oh, this could go into a PayPal dip. It's like, a little bit of it will. I'm close to buying NVIDIA. I'm pretty close. I might just buy NVIDIA like this week. It's hard to see that not working out. Even with DeepSeek stuff, it's an amazing company. And it's clear from the hyperscalers. We had it last week with Tesla to a certain extent, Meta a lot. We have it with Google here as well. Some of their CapEx is not NVIDIA, by the way. So don't think it like all the expenditures that they mention is NVIDIA. But they're going to make a lot of money. So that was another ad from Roy.
I don't know
I'm
what's
not
going on
running
here.
them, so I don't know. Are you? No, Doug is on your channel, so I guess he's just messing with me. One of those actually, Gurjap asked this about Enphase, if I'd go over that too. And I did want to mention Enphase. Enphase, another one. Like, there's been so many earnings, so much stuff. And when I got home, I'm like, I need a quick power nap before here. So I looked at the headlines. I looked at some of the numbers real quick. Actually, it's kind of interesting. Let me pull this up. We'll do two things. And I'm not even going to pull up the slide deck. Yes. Okay. Let me share this here. So let me just show you first. This is not including this quarter, so don't get too excited. But these are the last 4 earnings calls that they had. A history of not just double but triple misses too, because they've revised their guidance down and down and down and down. They've launched some new products, and I need to go into the actual listen to the actual earnings call. I am a shareholder in Enphase. It's my second smallest position, and at this point, I'm like, man, I probably should have bought more. But I've been buying a little bit here and there. This is probably the second company that second highest company that I've been DCAing in. HIMS was not a DCA. It was just like buy it while it's in the 20s, and I'm glad I did it that way. This earnings was different. Enphase reported, and they actually had a double beat. I believe guidance, what I'm hearing is it's a triple beat for guidance. It's up, now just 5.49% after hours, but it ran up, 3.66% today as well. And a lot of that was because they actually beat, the EPS beat was actually pretty good. Revenue beat was good as well. And it seems like that there's probably some bottoming in their actual product. I need to look and see what their guidance actually is. But I've also seen a number of partnerships that they've announced over the last quarter. And it going back to kind of the thesis with Enphase, Enphase is a market leader in the solar industry. Yes, Tesla is also a leader there too. Enphase is really more focused on the microinverter side. They don't do panels or anything. They do have some other products though. And it's mostly on the commercial aspect. A big part of that, which makes things difficult for them, is interest rates. They have fallen a little bit, but not by much at all. They've fallen actually a little bit more over this last week, which is great. But a lot of people be like, oh, solar is so bearish because Trump is not for green energy. He's for all these fossil fuels. The reality is, with what they're doing with AI right now and EVs and a lot of other new technologies, is we're going to need so much freaking power that it almost doesn't matter like what industry it is. Like, I think nuclear might be a huge winner. I'm late on that one. I had somebody that was pounding the table in uranium like 2 years ago, and I was like, I'm not ready for that yet. And of course, oil, coal, like those things will probably be really good depending on how tariffs shake out and everything. But solar also and wind, I'm sure that they'll be very good too, just because it's not a question of, okay, which of these energies do we need? We just need energy. And Enphase is one of those that's easier to scale. I think that we're seeing a little bit more adoption as well. And people have kind of gotten used to and normalized on those higher rates. Now, one other thing too is it's priced almost as if it's going out of business. This is their third bear market that Enphase has gone through as far as the solar cycle. It's very cyclical. They're going to be around a long time, unlike a lot of other solar companies. And these bear market cycles are actually a healthy thing for Enphase because it clears out. It's like a brush fire that clears out a lot of those new startups as they're coming up. They're trying to compete with Enphase, and then they just die in the bear market. And Enphase weathers a storm like this big, massive oak that it is. So, yeah, really good earnings. I've not dug into the numbers, but I just took a quick peek before my nap, and it looks really good to me. I'll continue to hold that one. I'll continue to add to it, not real aggressively, kind of like I'm doing with PayPal. I'll add a little bit here and there because even though there's a bit of a turnaround, and this may be the bottom as far as the actual numbers from Enphase, not necessarily the stock. The solar cycle can take a little while to really reverse, and I think it's going to be a while before we get into a bull market for solar. It could be years. So I'm not in a rush to like double or triple my position unless I see something in that earnings that's telling me otherwise, which could be the case. But I'll add slowly and just kind of wait, give it time.
Roy talked about Enphase for legitimately 20 minutes nonstop. And the most important thing that I picked up, and that you guys should have all picked up, is he said, I didn't look too heavily into the earnings. I took a quick peek before my nap. You know, this man's a Palantir investor, a HIMS investor, when he can just take a nap at 4 p.m. just casually. I just took a nap. No troubles in the world, no worries in the world. Just takes a nap, wakes up, looks at Enphase. It's up 10%, no problem. Just making more money. It's a regular old Tuesday.
That's kind of the thing of these smaller positions is like if Enphase like doubled off earnings, it'd be like that's pretty great. My portfolio then moves like what 3%. So versus like Palantir, what they did, yeah. So yeah, I'm excited by what they've done. I need to dig in those numbers again. Like just had so much happen all at once. Yeah.
All right, let's go on to our next question. How do you guys feel about Celsius? I know how Roy feels. He feels it's a commodity, getting cheaper and cheaper. No real moat there. Don't buy it. We've talked about this before. I have, what is Celsius at right now? 22.92. Oh baby, it's still falling. Glad I didn't buy Leaps a couple weeks ago. Yeah, I might buy Leaps at some point, but I get like I was talking with Roy earlier today, and I was just saying that like I'm just in no rush to diversify because I fear that like what I have right now is working. It's working very well actually. And so why do I need to change that? Like why do I need to own more positions? Oh, get into this, get into that. Like no, I really don't want to. Like I'm okay with owning, 3 or 4 major holdings and having those as my horses essentially. So Celsius, similar to New, I have my entire position is Leaps for 2027, and it's super small position. It's like I don't know, like maybe 0.5% of the portfolio just for funsies to support Tanner and all of them.
So only 500,000 for you then?
Only 500,000. God, dude, can you imagine if I had $100 million portfolio? You think I'd be doing this shit? I'd be doing this from a yacht.
I think you'd still do it, yeah, but from a yacht or private island that you own or something, and I'd be there with you at that point. You'd be like, "Hey, come on, I won't even charge you rent." It's like, okay,
I
cool.
wouldn't be talking about stocks. I'd do like one of those rich influencer dudes vlogging where all they do is party and do shots and meet supermodels, and they just film it, and 1 million views later, they're famous.
But yeah, Celsius, Tevis nailed it for me. It's a commodity. Does that mean you can't trade it and make money? No, you absolutely can. That's not really my game. I do trade a little bit here and there. I did try to trade Celsius at one point. At some point, the Pepsi inventory will dry up as far as that glut that they had, and the stock will pop. But I don't think that they're going to accelerate like they once were. And there's so much competition. There's so much. Like, look, that's one of the great things about Celsius, by the way, is it's a consumer-facing product that you can find just about anywhere. So when you're shopping in the stores, when you're in the gas station, when you're looking at ads for that week's sales, look at Celsius. Look at what else is being offered and labeled very much like Celsius. Look what other people are putting in their carts. Look what's coming off the shelf. Look what is being priced ridiculously. Like this week, talked to Tevis about this. I bought some Celsius, not the stock, but the actual drink. It's not my favorite. I like Monster better, but they were selling at 99 cents a can, which is just nutty. Like I was like, I'll drink Celsius for 99 cents a can easily.
Yes, of course. Okay. I want to address this question. Why would anyone invest in Robinhood when they screwed GameStop shareholders is beyond me. I get that stance. I mean, I pretty much even shared that stance for a period of time. But I think the thing, and I'd love Roy's thoughts on this, but like the thing for me that I've come to realize is you can't really, like, it's totally fair for you not to invest in companies from an emotional stance or an ethical stance if you don't agree with, what they're doing. I just think that, like, the reason I'm in investing in general is to make money. And I optimize for that as my primary metric, my primary KPI, right? And if I have a company that I don't want to take Robinhood because I feel like it's sort of water under the bridge at this point, and they've done a lot for retail investors over the past several years to the point where like most people don't even think about that GameStop thing anymore, and that's been a lot debunked because their hands were somewhat tied in that whole fiasco. I don't want to rehash it, but my point is like if there was a company where they're growing 100% a year and the sentiment is mixed versus a company where like it's all kumbaya and rainbows and sunshine, but they're growing, 10% or 5% a year. It's like, hey, guess what? I would invest in the company that's going 100% a year because I'm here to make money. And like, that's the main, like, I'm not here to run a charity. I'm not here to, invest for 40 years and then retire. It's like, I want to make outsized returns because otherwise I would just be in the index. And so if Love Boat Captain is still in the audience watching, which he might not be, or she might not be, that's my answer. It's like, I'm investing to make money. And yeah, I understand the emotional aspect, but if you're here to make money as well, then you're just going to look at the growth rates. You're going to look at how good is this business. And if the business is growing 100% year over year, it means that a lot of consumers, a lot of investors, they're all fine with that business. They're doing something right. And I think with regards to Robinhood, at least from what I hear from Roy and Tanner, and even looking at some of their reports more recently, like they're innovating, right? Like they rolled out the election betting, they rolled out this, NFL betting. They're doing all of these initiatives. They're expanding internationally. They're doing initiatives in crypto. And so, like as a product guy, I'm like, well, I can't hate on that because they're offering some of the best products in the market right now, and it's just reflective in their financials. And so, I don't know. That's my rambly answer on that.
Yeah, mostly agreed. There are companies that I think that'll do very well that I do not invest in just because I think they're a detriment to society. Meta was one of those. When they began the turnaround, probably I wouldn't have said that I bought the bottom, but I was like, I didn't like the censorship at all that was happening at the time with Meta. I didn't like the thesis, and I also think that social media, especially for young people, is just largely detrimental. There's a lot of bad to it. So I wouldn't invest in Snapchat either for that reason.
Well,
But
even with Google recently, like I know the two of us were on this pod talking to Matt about like how Google has gone woke and we don't want to invest in it. But like I guess in that example, it's actually posing a risk to to the actual performance of the company.
yeah, but with Meta, like I think Zuckerberg's an amazing CEO. I like him a little bit better now that he's more based, but I still, I'm a big leadership and culture guy, and I think it's ultimately, and yeah, I think that's the case. Like a lot of these companies realize that they went too far to the extreme left, and they're like, this is not healthy for us. It's not healthy for the country, and it's really not healthy for the bottom line. So they're backing away from that, which is great. And I don't mind companies having a political stance. Hims, the CEO, has a political stance that is not in alignment with mine, but I still invest in them. I don't have an issue with that. But like Philip Morris is another one where I don't know if that one's like, I don't know how the stock is or the business is, but I'm not even going to look at it just because I'm like, it's tobacco and I'm not into that. Like, should it be legal? Sure. Marijuana stock, same thing. Should it be legal? Yeah, I'm for legalization, but would I invest in that? Like, no. So Robinhood, I think it was, certainly they messed up during GameStop time. They did. And they, were one of the biggest names with it. A lot of names messed up on that. Robinhood probably did it a little bit worse than most people. I think they've learned from that. I think they've improved from that. But yeah, I have no problem investing in them. They're very open and transparent. And especially with retail now, like you'll continue to see that in earnings calls. You'll continue to see that in the way that they interact with people as well. It's not just myself and Tanner and Amit. It's great. Like there's more than 500 people that were retail investors at that Miami summit that they got to talk and interact and play with different products that Robinhood had and interact with, 50, 60, 70 Robinhood employees. It's awesome. So love that kind of company, and they're executing their leaders.
I want to bring this up, and we're gonna log out here soon, call it soon because we've been on for an hour and a half. But Tanner said here, Google is unwoking. And I think, you want to hear my hot take about this?
Yeah.
So I think the macro is going to unwoke most of these companies. And the reason why I'm more bearish on Apple now is because they're the last to unwoke, where Tim wasn't even at the inauguration, whether he wasn't invited or he just didn't show up. Every other, like Elon was there, Zuck was there, Bezos was there. Who else? Sundar was there. Tim was not there, Apple CEO. What's his face? Tim Cook. I almost called him Tim Apple.
You can call him Tim Apple. We know who you mean.
Tim Apple. He wasn't there. And then I was also seeing reports that when Trump did executive orders around like DEI and just scrapping a lot of those initiatives, Apple was essentially resisting them and throwing them in court and like clinging so hard to those initiatives around equity and inclusion and all that. And I just think that those little instances are the small windows that I have into a company's internal workings and into their internal culture, because I don't work there, right? And so, yeah, I do think for Apple, like they are really not, they're at odds with this new administration. I don't think they're going to be they're not going to have smooth sailing. And I just think that's going to hurt them in the long run, especially the fact that they're not really innovating. They're not really growing that much. Their main growth is buybacks and SBC. And so I would imagine that Meta, Amazon, Google all unwokes over time as a result of this new administration, as a result of like the Overton window essentially shifting. Apple is going to be the last one, and they're going to suffer for it, or at least their stock will.
Oh yeah, my opinion. Yeah, and maybe we don't want to rank the Mag 7 there, but Apple would be at the bottom in both of our ranks for sure.
Yeah. And this is from somebody who traded Apple in 2024. I made like 40% off of trading Apple from March, and I think we're on stream when we're talking about it. I bought it in the 160s. I sold it into 230s or something, 240 maybe, and I held it for like 4 months, and then sold it. And now I'm like super bearish on Apple. Where if you listen to a stream from last year, I'd be like, no, Apple's not last, but they are.
Yeah, they don't innovate anymore. They don't really grow. They do buybacks, but if you want buybacks, get PayPal. Much better buyback. So, your number one for Mag 7, Tesla.
Well, if Tesla's in there, yeah. Honestly, man, I'm growing a little bit more bearish on Tesla, just because, like, I can tell, like, I've been on a lot of Tesla earnings calls because I've held the stock for like 5 or 6 years now, and Elon is pumping like never before, and that, along with all of his other, like, I know never bet against Elon and all this other stuff, and I'm like, it's still my third largest position, but I'm just more skeptical and more cautious now than ever before. I would say, yeah, Tesla is up there for sure. Amazon and Meta are like Meta is probably, if you say, hey, Tev, like, what's one stock you regret not really owning to a large degree, it would be like Meta, because they just keep killing it. I heard, I mean, I was with Tanner, and we listened to Zuck, and that opening remark on that earnings call, I was like, man, this guy is so on top of it, like just excited about the future. Oh, yeah. And one of the things that he said, actually, and not to dive into a rabbit hole, but like I was talking about this with a friend last week, where in the opening remarks, they were saying one of their internal projects that they were working hard on was an AI that can, by the end of 2025, code at the same proficiency as an intermediate engineer. And I was like, holy crap, man, you unlock that, you just completely change the entire game for AI and the use cases. Because if they make it commercially available, every single person with a business idea or with an app idea can now start coding that app through AI. And then the other possibility is, if they do not make it commercial and they only use it for internal purposes, then Meta can just get so far ahead, because they're like, okay, what does Salesforce offer? Cool. Let's just put all of our AI to just build a Salesforce copycat and then run the Microsoft Teams playbook of just bundling everything in to their offering. And I was just thinking about it from that perspective. and the fact that these things will like only get better and better. They're gonna correct their own code. They're gonna learn from their own code. It's gonna be wild, man. And I think if Meta unlocks that, like the software layer of AI, it's freaking game over.
Yeah, no, I think it's a great company, one that I can invest in, but I wish shareholders well. Yeah, Tesla, I would put at the top, but it's trading very much on a narrative. We need to see the autonomy piece really move this year. So we'll see. But I think maybe, unless you see any other questions, Sagig asked this one. He said, related to the Mag 7, if you can speak for a minute about it, just curious, why not yet building NVIDIA? Why holding back, waiting on what to happen? Part of it was valuation. Part of it was I like to have a very concentrated portfolio. So I have just 9 names total that I've invested in. And, if I lose conviction in one or it gets to where I want it to, I'll exit that and I'll just go down to 8. I'd like it to not get too big. And so I'm allowing myself to build just one new position this year, unless I exit something. So, if down the road I'm like, hey, done with PayPal. I don't think that's happening. But if Investor Day comes out and it's like that, I'll sell. I'll let people know, and I can add something else there. I don't foresee that happening with any of the names that I hold. NVIDIA is in the same tier as Amazon for me. Those are the 2 big names out of the 6 that I'm looking at. And so really it's a question of, while the names that I have, the 9 names in my portfolio that I really like, I saw some opportunities there with Robinhood to add aggressively, HIMS to add aggressively. SoFi is where I want it, so I've not been adding there. And PayPal, which hindsight probably should have waited. But I'd rather look first to companies that I own, even if I'm averaging up, and get that position to where I want it to be. But now HIMS is, trading in the 40s. And I'm like, well, I've got a large HIMS position. It's close to 10% of my portfolio anyway. Probably don't need more HIMS. Enphase, slow DCA. PayPal, slow DCA. Robinhood, phenomenal, but it's really rose up a lot. So kind of a little bit faster DCA. Tesla was trading in the 400s. It's still in the upper 300s. I don't need to add fast there. Palantir have a lot. So basically, all but like a couple of names in my portfolio, I'm like, I'm happy with where that position is at. And I've actually got money. So I'm like, okay, do I buy the dip? And basically, it's a question of, is there another name that I find more compelling? And if not, then I'm probably going to buy NVIDIA. And I may do that, this week.
It's exciting. That is definitely exciting. Okay. Do we want to bring
up a hedge? I finally built a hedge in. The market gave that opportunity on Monday. And that's one of the great things, by the way. I'll just share this piece real quick. We've seen massive market dips both the previous Mondays. And if over the weekend, when you're like, oh man, it's going to look terrible on Monday, and of course it recovered. If you're like, I wish I had taken more profits, or I wish I'd built a hedge and done this. When the market gives you an opportunity to do that, and you're like, I wish I had done this. And then it's like, okay, you can do that now. It's not a great time to second guess and be like, oh, things are fine. I'm not going to do that now. So I built in a hedge, which is doing really well right
now. What's your hedge?
It is the company formerly under the ticker of SQ.
What if I just didn't ask that? I was like, what if I just didn't ask that question? I know you were fishing for it, and I was just like, okay, cool. Thanks.
So if you didn't ask, I wasn't going to say, but yeah, block. I think it's it's a good product, a poor company, and a not good CEO at all. That is also, I think today was ironically brought down some because PayPal did not have good earnings at all, and the two tend to trade in tandem. So they tanked pretty hard, and I'm like, oh man, at least my hedge is printing. My PayPal position is larger than my hedge, but it did alleviate some pain there. So I just don't believe in them. And so the hedge it's all puts. It's not a short position, and it's not designed to make money. It's designed that if the market gets hit, and I see a couple of reasons why block would be hit disproportionately. Then it's there. If at the end of the year I've lost all the money that I put in block, I'm very happy. And the reason why is that the market is humming right along and doing great. That's what a hedge is.
I was laughing at this comment. I was like, what is he talking about? And then I was like, oh, he's talking about Jack.
Yeah, Jack Dorsey.
Okay. Anything else? Thoughts on Disney and Uber going into earnings?
I don't really have any strong thoughts on that. Disney's one of those where I've never really been, to the culture. Leadership, I think that they fixed it somewhat, but culture, I don't think so. They'll probably be okay. It doesn't interest me. It just doesn't. Uber, I think it's a well-run company. The market probably sold it off a little bit more than it should have on Tesla autonomy. I don't know where they're trading at right now, but it's a well-run company. I think, some people are treating Uber like it's going to go away in the next 10 years. Like, I don't think so. They iterate, they innovate. They'll be okay. But yeah, I've never really been attracted to their model that much.
Yeah, I would share those sentiments. Like, I think Uber is very strong right now because it's really the only. I mean, I can't remember. I've used Lyft like twice in 2024, and then it's almost exclusively Uber. And so that brand loyalty, I think, might be higher for me, but a lot of people just have them side by side on their phone and they just go with whoever's the cheaper price. So there's no real differentiation in terms of the product offering there. And I think Uber is going to continue to be strong, but like with Uber, it's going to be a grind to the bottom because their margin is your opportunity, as a consumer.
Yeah.
And so if they want to make more money, they got to either increase prices for you, add some hidden fees. So like if you go to a grocery store or a fast food place on Uber Eats, every item on the menu is more expensive than if you actually go in person. Like that's aside from the delivery, aside from everything else. Like if I look at a burrito for $10 in the burrito place, is $12 on Uber Eats. So like that's a hidden tax essentially on you. And all of these things, right? Like the surge pricing and all of that. Now they're like defaulting me to tip every delivery person or whatnot. Like, and that's fine. But over time, that's going to get worse and worse as they have shareholders to look out for, and shareholders are looking for CAGR. Shareholders are looking for a consistent return on their money. And the only place that Uber can really get that from is you as a consumer. Like that's their margins, right? So I just think that the business model itself is nothing that, like, I love the product as a consumer all day, every day. I don't know, man, as an investor, it just doesn't seem super exciting to me,
Yeah, from the valuation standpoint, it looks pretty good. But I don't buy stocks just based on valuation. If I did, I'd be buying, a lot of Celsius. I'd have a huge amount of PayPal. I'd be completely out of Palantir. I would be out of HIMS even though the peg looks good. But that's valuation's important. It's not the most important for me. I need to know that and understand the thesis and the direction the company is going. And at least that's my style. Has worked out well for me, and I don't see a reason to deviate from that.
Absolutely. Let's see here. Do you think Tesla owners will be able to put their car on Uber once unsupervised FSD rolls out?
No.
Yeah, no. I'm excited for unsupervised FSD in Austin and California later this year if they actually stick to that promise. That's going to be really exciting. I know Google was talking about Waymo and the hardware costs coming down as well on the earnings call. And so, like, I like that pressure on Tesla. With regards to Waymo, I think that, Jesse, it's going to be a long time for you to wait until we have exactly what you're talking about. And it's really just execution risk that's baked in, right? So, okay. Anything else to talk about, Roy, or would you like to call it?
I think let's wrap there. There's always more to talk about, but love covering these names. So you guys be sure to do your own due diligence. I will encourage you. It's earnings season. If you're not in the habit of doing this, pull up, whatever company you're in, their investor relations, and look at that earnings report for yourself. Don't just trust the market reaction. The market oftentimes gives you opportunities. And if you learn how to read those investor relations statements and you learn what to look for in companies, then when the market gives a dip, like on Google, maybe that's one where you're like, oh man, this is silly, this is stupid, it's a great opportunity. Too late, Tanner.
Do you want this I almost said this tool. Do you want this wrench on our stream?
You can invite him. We can go a little bit longer. That's fine.
I was hoping you'd say no, but okay, I'll invite him, I guess.
I can't be negative towards Tanner anymore. Like for a little bit of time, United States and Canada, we could hate each other freely, and now we can't do it anymore. So there's at least a month hiatus.
I've had migraines longer than that trade war, bro.
That got resolved so quickly. I'm so thankful. I mean, it's not fully resolved, but it seems like that at least things are heading in that direction. So
yeah, Tanner, I put the link in the chat, so you can always join. Tanner is always late. This is true.
Is he gonna pump shift 4 or something like that?
I will kick him.
Kick him, yeah.
Let's see.
You can have 5 people. Yeah.
No. Here he is.
All right.
What's up?
Hey.
I love listening to you guys talk. Here, wait, let me bring you down so I'm not just like looking into the sky. How you guys doing?
Good. How are you?
I loved your conversation about Robinhood defending its honor, trying to stick up for PayPal, saying that it's going to do well between now and 2030. Man, too many transitional years.
Yeah. I mean, like you can't come out hot out the gate being like, we're going to shock the world and then have 2 transitional years in a row, like.
Yeah,
but at the same time, like the type of investor that, just to my earlier point, that it buys PayPal, like I would imagine they're like, we did 50% this year. We're killing it,
Yeah. But yeah, so I think for me, it's just sort of it was a trade, and then there was a potential if they were to turn it around into a longer investment. But I think that there's a thing that people get stuck into where they turn their trades into investments whenever they don't perform the way that they want to. And sometimes they turn their investments into trades whenever potentially they work too well. And this time I didn't want to do that. I have a pretty tight-knit portfolio. I know you guys think that I run a ETF, but it's the slimmest it's been in a long time. I think I'm at like 17 names. That's pretty low for me.
It's like an obese man saying, hey, I've lost 50 pounds. Great. I weigh 350. It's like, it's progress.
It is progress. We're working our way down, but I'm sorry. PayPal had to get the dicing.
At least you cut Block first. So I'll give you credit for that.
Block's out. PayPal's out. And this is sort of the thing, right? Is like, I'm still heavy in fintech. As people know, I run a fintech frenzy. It's a daily live stream that's on at 8:30 p.m.
I will.
But
talk about your course. How about that? Go ahead.
Future investing.
I can't hear you.
Me too. You told me to. So I'm trimming down to by far what I think are the best names in fintech, which like to me, that screams SoFi, Hood, Nubank, and Shift4. And I might even trim Shift4 if they don't, show me that new leadership can do what Jared Isaacman is doing. Or like I'm literally going to their investor day. If he says to me like, oh, well, I'm still going to kind of be here in the background if they need, advice, I'll be happy with that. So I'm interested in those 4 names for fintech, but Roy, I don't know how to get you on Google, man. I think that this is a good opportunity for you to consider this play.
Google or Nvidia?
Google. Well, I mean, you're already going to get Nvidia. I always think of you as an Nvidia shareholder. I'm surprised you're not even already.
Yeah, it may happen this week. So I think it's imminent at this point.
Yeah. It's a guarantee.
If you had to choose between those 2, which would you invest in?
Nvidia.
There we go. That's why.
Well, do that, and then let me talk you into Google when you're done
So no, hold on, Tanner. If you didn't own a position and you had to buy one at these prices, is it still Nvidia?
I'm buying Nvidia more than anything right now.
Yeah.
Okay.
Like, which is honestly a really liberating feeling. Like I feel like I'm like, I haven't bought Nvidia for quite a while. And that was my mistake. I should have bought all the way up. And actually for the longest time I was selling all the way up because I didn't know the impacts of AI. Well, I haven't sold for, years now, but I mean like between uh essentially 2020 and 2022, there was a lot of profit taking. And
Yeah.
that was my mistake. But not in the last little bit. Now in end of 2024, 2025, I'm back to buying Nvidia. And by the way, Tevis, I think a lot of people look at it the way that you did, where you saw this big run up and you go, wow, this company is expensive. But there's a lot of valuation closing there. I mean, if you actually compare things like price to free cash flow between Apple and Nvidia, you'd be surprised how cheap Nvidia is. Like surprisingly cheap.
Yeah, I mean, they're the same price today than they were in May of 2024. And that's like 4 quarters ago, basically. So I get it. Like they've been sort of flattish, or they topped out for the last 6 months.
And I see some people saying CSP on NVIDIA. I'm for CSP, but when I want to start a new position, I've learned, the hard way. You don't go in with CSP in a bull market. You just buy it. Then if as you average in, you'd be like, oh yeah, I'll maybe sell a CSP or two on NVIDIA or whatever name, a little more expensive on a name like NVIDIA, but and then if it fills, great, and if it doesn't, I still got a position. But my initial buy will just be a buy. It's not.
I will take the other side of that argument all day, every day, because one thing that I'm loving right now is in the money CSP. So like if Nvidia is at 118 right now and I want to own it, I would write a cash secured put at like 122 for 2 weeks from now. And if it doesn't get filled, I am paid very handsomely for that. And if it gets filled, then great, I own it.
Yeah, I don't hate that, Tevis. I'm more thinking of out the money CSP, which is normally what I do. But yeah.
Either way, that whatever gets you to you two to own Nvidia. I mean,
Nvidia, yes. Google, it's night and day difference with leadership and culture. And give me Nvidia all day, every day. Google, like I can see the merit, Tanner. And if I didn't have an issue or I just didn't care for whatever reason, my investment strategy was like, who cares about leadership? Who cares about culture? Yeah, I'd be looking at entering Google off of this print.
When is Nvidia earnings, Tanner?
It's
next week.
Here. Let me bring it up. I actually don't.
I think
because I want to now, like, I want to
next midweek or something.
I got into Nvidia at like 133 or something, and then my shares got called away at like 143, 144, and I'm glad they did because it's at 118 now. So I kind of want to just get in now, or just do like exactly what I said, like 122 CSPs or something.
February 26th. So same week as HIMS.
Does it usually run up into earnings?
No, 24. I think HIMS is 24th, right?
Yeah. It's on the same day?
No, it's 26.
Oh, okay. Wow. So HIMS earnings, PayPal Investor Day, NVIDIA earnings. It's going to be a busy week.
Right. No, yeah. I'm probably going to be an NVIDIA shareholder before earnings. So that's where I'm at today. I had some set and raised some cash, partly because I was concerned about some market stuff. Ended up kind of being right and kind of being wrong. And also I wanted to have cash ready to buy the dip on any name in my portfolio that I'm like, hey, this is a great opportunity. And even though PayPal is down a lot, I'm like, I'll add a little bit, but give me Investor Day and maybe I'll decide then.
You know what's so great about Google that no one considers? No key man risk.
Oh yeah,
you ever consider that, Roy?
So that's like when Starbucks when they announced they were firing their CEO, it's like the stock's freaking pumping, and it's like that's when you know you had a bad CEO.
That's a dumb comment though, because it's like the key man. Oh, okay.
Yeah,
I was going to explain why that was dumb, but sure.
It's a joke.
Yeah.
Yeah, he's. I don't think he's like a terrible CEO. Just like out of the Mag 7, he's the worst, I think. So
You have all these unassuming risks with Nvidia. I think it might be one of the most risky companies out there because Jensen's so good. So if something happens to him, the stock's going to tank. So you really can't buy it because of that risk. Google, on the other hand, no one cares about Sundar Pichai, so the stock can run whenever they change CEO. I think that's
yeah,
you know
Sundar Pichai just disappears. He's gone from history, and the stock pumps. It's like, yeah, I mean,
or he just retires. He doesn't have to leave human history or whatever you say.
yeah.
But he's actually pretty young. I didn't realize Sundar's pretty young. They have he's got a long runway.
Sven, you asked what's key man risk. That's when a lot of the thesis of a company really comes down to who is in charge of it, or a certain couple of people that are in charge. So classic example is Tesla. Would Tesla be Tesla without Elon Musk? The answer is no. So there's significant key man risk. If something happens with Elon, if he retires, if he gets frustrated, whatever, moves on to just SpaceX, that's really bad as a Tesla shareholder versus, with Google, people would actually probably be excited if their CEO is gone.
Yeah. Which is a little bit, nice in a way whenever you have these companies that, like what Warren Buffett says, where he holds companies for so long that he needs them to be able to be run by dummies. And it just means reducing that key man risk and it doesn't have to be the CEO, by the way. There could be the chief technology officers. There's been a couple companies, like I think Upstart was one of those. They had like a literal Harvard genius that was creating the company or creating the technology of the company. And then whenever he left, it like killed the business.
Yeah.
So yeah, that's a perfect example of key man risk. Young person that ends up passing away, and luckily it was replaced by Tim Cook, who's also very very smart, but
he's okay.
Still not Steve Jobs.
Manager, but sure.
Elizabeth said no Palantir without Alex Karp. That's another good example. Although I do think that like their number 2 guy, that he's actually amazing. Although he's more on the government side now, but if Karp retired, yeah, it still would have an impact. Anthony
number 2 guy, is that Shyam?
Shyam Sankar, yeah, he's amazing. He's
just a product guy, right?
Yeah, yes, yeah, and very focused on the government side, but he's brilliant. Yeah, like if Karp wasn't there, if he retired, I'd still feel the same way about Palantir. Although without Karp, Palantir would not be where it's at. So,
yeah.
Didn't what's his face something Kim leave the
John
PayPal
Kim.
product guy? Yeah,
John Kim.
He left. Where'd he go? Do you know?
I don't remember.
Not sure.
What's your thoughts on that? Like, do you think that, because I know he was pretty solid at his role.
Yeah. So I thought he was really good. I thought he'd be considered, and maybe he was, for the CEO position. I think Alex Chris is a better fit. I'm kind of curious just to kind of see. But he was one. I think there's one guy left, Frank Keller, that's left of the C-suite that was there under Dan Schulman. Everybody else is gone. And Kim was not even there that long under Dan Schulman. So, people have different reasons for leaving, retiring, moving on. And it could be that PayPal's asking this or that he's asking this. We don't really know. But yeah, it really just comes down to those products and how they're executing. And we'll hear that on Investor Day. So if I am tuning into that and I'm like, okay, these guys, they have no idea about their products, then I'll be like, okay, Kim had a big impact and I need to be careful and reconsider my thesis.
Yeah. You guys look into Shark Ninja yet or what?
Nah. NVIDIA,
yeah.
Portfolio. And there's a lot of names where I'm like, hey, this is probably a good name that's going to do well, but I need to have an outsized conviction in the company in order to buy it and add it. So
real quick, Roy, what does better between now and 2030? NVIDIA or PayPal?
NVIDIA.
I think you just answered your question right there, my friend.
And that doesn't mean I'm going to sell PayPal. Like I still think.
So hold on.
I think that the Investor Day will be a confirmation of this. That they'll reach an all-time high by 2030, which is great. Because it had fallen so much, it's like a 5x. It's awesome. I think NVIDIA could be better than a 5x by 2030.
Yeah, Roy, I think we're on the exact same wavelength because I was going to bring up that comment and I was like, all right, PayPal peaked at $310 and it's now $77 and Nvidia's $3 trillion. So you basically think Nvidia is going to be like 12 trillion by 15
12,
trillion.
15 trillion.
Yeah,
I
15
think
trillion.
it can be, yes, which is
Yeah.
ridiculous, but I think it can be.
I also think it can be, which is crazy.
It is.
I made
It's
a video a
freaking
long
nuts.
time ago talking about where I think Nvidia price would be by 2030, and it's about to hit the most bullish target on that video like soon. Like
The funny part is that like Canada's entire GDP is 2 trillion. So we're basically saying by 2030, Nvidia is going to be like 7 times bigger than Canada.
Yeah, I mean, it's not the same. It's apples and oranges, but yeah,
Yeah.
it's funny. So like part of that too is my thesis. AI is a heavy part of this bull market that's playing out. It's not the only part of it, but it's a big part. And I see the bull market likely continuing. Probably until 2030. Maybe it ends a little bit before, maybe a little after. It's a little bit far out. But who are the market leaders that are going to continue to be market leaders out there? Did anything about DeepSeek change the thesis on NVIDIA? Not really. Maybe shifted it slightly, but that was at least a part of the thesis I didn't believe anyway. So versus like PayPal is well positioned and it's cheap, and I think they'll execute well. But are they going to be like one of those big stories over this decade? I don't think so. I think people will be shocked. The world's probably the wrong thing, but surprised. They'll be surprised by PayPal, I think. But Nvidia, it's crazy that you throw out something like, oh, could Nvidia go to 12 or 15 trillion by 2030? Like if you said that 2 years ago, people would be like, okay, you're on crack. There's something wrong with you. Now it's like, yeah, we could do that. It's crazy.
Yeah. But valuations can get pretty dang extended whenever you start adding things that don't need human capital.
Yeah, especially in a bull market. Like the longer the bull market goes, the more that those will be extended, and we're not there yet on Nvidia. It's cheap.
Yeah. But as long as PayPal keeps pushing, that other things, people don't mind the valuations as long as you have a trailblazer of new potential multiples, which is interesting, by the way. I'm watching this company and I love the people that hold Palantir, but like it's getting so crazy, guys. Dan Ives is literally calling this thing the next Salesforce, and it's like getting close to the market cap of Salesforce.
Yeah,
like it's ridiculous.
Yeah, it's only 100 billion off. Like what is that? Like $140 for Palantir? Like
yeah, it's like some people's price targets soon.
I said this to Tevis. I wouldn't buy any of it here, and I think it's an amazing company. I think it's going to hit $1 trillion market cap at some point. Do I think that's going to be 3 days from now? I mean, it could be at this point. Like who knows? But no, it's not going to. It needs to catch up at some point, and they're accelerating. They're doing great things. Versus like last year, you guys were telling me like, oh, it's so expensive. It's like, dude, you're wrong. Now I'm like, you're right. You're absolutely right. I've even sold some stock, a common stock of PayPal, not PayPal, Palantir. So
yeah.
That's their value is $1 trillion today. All right, $1 trillion.
I'm not going to buy GameStop.
$500. Yeah,
I'm not going to buy GameStop, but like if it does start to become a value play and the cash is there, like I don't follow the thesis at all. I just listen to what Roy said. But I'd rather hold PayPal than GameStop, and I don't want to hold PayPal because I think that that's an undervalued play, and that's actually just not where I want to be right now.
Bro, I'm actually shocked to hear you say that because Roy here says GameStop is as good as Treasury bonds. They're basically the same thing. So
But I don't want Treasury bonds.
I'm really shocked you would say like PayPal is the riskier play out of GameStop and PayPal. If GameStop is like Treasury bonds,
PayPal is like Treasury bonds.
It is now too.
I don't think PayPal is going to go down. I just think it's just opportunity cost. I have no, I'm not concerned for PayPal. I think that they're going to buy back shares faster than they are going to lose market share. I think they'll be fine.
Basically, if someone wants to hold cash but actually have a ticker assigned to it, you can buy PayPal and there's upside.
Yeah. If you hold Apple, don't hold PayPal because it's just doing everything just slightly better.
PayPal is doing better than Apple, I think, but yeah.
That's
But no,
I'm saying
similar in
PayPal
that.
is doing better.
Yeah, exactly.
Yeah.
Yeah.
Because they're doing buybacks faster. They have top and bottom line growth just a little bit faster. But I also wouldn't want to hold Apple. Like I'm just full on bots, AI, a ton. Everyone is saying the application layer of AI is coming. The growth is going to be insane. Okay. I don't want to not be there. Every CEO that I'm listening to, every conversation is all like, hey, we have to continuously reevaluate how fast this growth is going to happen. PayPal or Palantir is getting that exact same multiple because of the impacts of AI, like how fast this is going to be growing. Okay. This is why I not going to read that comment.
Nobody's listening to you, Ben.
You have to read it.
Holding Canadian dollars is better than Joby. No, it's not. No, it's not. The Canadian dollar is down this year. Joby is up. Okay. You guys are treating me like I made him buy Unity or something. I don't know why he didn't get this treatment. I was down like 50%. He's up right now. He's up.
Let me see. Joby year to date. The amount of times that I Googled it. Joby's down year to date, Henner.
How much?
1%.
1%. Okay. It was up 2%.
Same as the Canadian dollar. In his defense, same as a Canadian dollar.
Yeah, you should go into Joby like I did with my gift of XYZ and use it as a hedge. Just build a big position there.
We currently have 200 people watching the stream, and I just want to publicly make a request. If Joby CEO Joe Ben Bevert wants to come on the stream and wants to talk about Joby, I would love to host him. I know we all would.
Yeah, I'll be nice. I'll be kind.
Yeah, absolutely. Tanner, you were saying?
What?
What were you saying about whatever you're talking about?
AI.
AI.
I think that there's very few plays that I want to be in that are not technology related. That's all. And yeah.
Bro, this is going too far. I know we're joking about Joby, but like I'd rather have Joe Ben Canadian than doing the Canadian dollar, honestly. Did you end up buying Joby or still not?
No, I didn't buy it because Steven didn't join the SoFi Weekly. I said I would buy it if he joined the SoFi Weekly. He said, nah.
Bro, so, I would buy it if you bought it. So you're holding Joby back, honestly, right now.
Yeah, I think Hims is going to walk away with that one, guys. There's a lot of time. Hims will be very volatile, but I'm just not seeing the competition.
I'm sad that it went to you first because, like, the roundtable went to you first because I would have given Hims too.
Yeah, it's really unfair because you and Chris also would have. Like,
yeah.
when the three of us see like the same name and we're like, hey, this is a phenomenal opportunity, that's usually a pretty good indicator because we have some pretty different investing theses.
Yeah, and I'm just glad Tanner's in Hims that he can at least just get a little bit more exposed to the name. I don't know why he's like still super against Hims.
I'm not against it. I'm a shareholder.
The more, do you count it in your 17 stocks?
No.
Exactly. So I think the more that he can do some due diligence on Hims and read up about it, then maybe it can count. It could be stock number 18.
That's so funny. It's not even in my list of stocks. It's just
what's number 17? Can you tell us that at least? What's number 17 in your holdings?
It's actually an ETF.
What ETF? Count?
Is it the one that pays?
No.
What is it?
I'll put it in the private chat.
All right.
Okay, I don't know what that is. Oh yeah.
Oh, okay. Well, it doesn't really matter. Like, why can't we say that one out loud?
I don't want to.
All right. Well, anyways, so I want to see a day where Hims is bigger than that. All right.
It's not very much. I use it like cash, but yeah.
Bro, some of these comments around Joby, I can't even put them up on screen because like they're just too much even for me.
Yeah, Archer is better than Joby, I think. Yeah, like that's the funny thing. We'll see over this year, but
That
I
is
think
not even true. The whole time you were saying Archer was larger, they're the bigger brother, and then I showed you the market cap, and you were like, "Well, still."
I said better, not bigger.
You said
I said
bigger.
they're the number one play in this industry.
I don't know if it was out of spite or not, but I think Tanner started a very, very dangerous precedent that's going to start the decline of our Christmas gift giving celebration.
No, the rules change next year. This is the last and final time that anyone gets to give out Joby.
Next year, we're going into penny stock land, ladies and gentlemen. We're going into meme coin land.
1,000%.
If
I'm down
Tanner
for that.
gets me next year, he's getting fucking Melania coin. All right, that's what you're getting.
I'm down for that. I'm down for that.
Fun, actually.
Do you think you were going to lose as much money on Joby as I lost on Unity?
It's possible. What's Unity up to right now? I don't even know what they're trading at. They're on their way up.
Yeah, how's Lemonade looking? Down 6.6% year to date.
This is not your game.
Oh
yeah, what
God.
are you talking trash for? You're losing right now.
At least
if Joby beats
Transmedics
Lemonade, you're in serious trouble.
At
Bro,
least
mine's a
Transmedics
real
is
freaking company.
Lemonade?
Yes.
That's a juice. Joby's taking people to the skies, and you're fooling around with insurance companies that you don't cover?
It was pretty unfair though, just because like three of us would have given the exact same name if we had the opportunity. But him's up. I mean, look at this. Look at that. Great earnings, right? No earnings.
It feels really good to be the recipient of a winning pick. I want Roy as the person that picks my stock next time too. He's very good at this game.
Well, the nice thing too is we made the rule that whoever wins this time, there's an actual prize because you get to decide who gets to whom. So I'm not going to have Tevis or Tanner give to me. It'll be Chris. Chris will at least give me something that he thinks is nice. So.
Did we decide that? When did that become a rule? I don't remember this.
We talked about it. I think I took a screenshot of it. That whoever wins, the guy that bought him, obviously, will decide. And then next year we'll do it that way too. And I'll just.
You guys are such assholes because Tanner's like, I want Roy to give to me, and then Roy's like, I don't want Tevis to give to me. It's like, dude, I'm the one that got you into hymns. All right, like.
Oh yeah, I would much rather Tevis have Lemonade than Joby. Much rather.
Yeah, exactly. I can't even participate in the Christmas gift giving this year because I'm not going to buy Joby because Tanner doesn't own it. I'll buy it when Tanner buys it.
Yeah, but it'll be fun though.
So thanks for ruining Christmas for me, Tanner.
Just ruined the season. I do think that we should do a penny stock version of it as well because I think that could be fun. But and I didn't go in it looking for the worst company. I thought let's find something that could really just like Wall Street Bets could take it to the moon. So I went to Wall Street Bets. They said I think it was one of the first articles I clicked on. It was a Joby one.
While doing laundry.
What?
While doing laundry.
Yeah. I was half asleep. Did a quick DD on it. But the guy on Reddit said it was legit. So Tevis, buddy.
At least give me the first in the space. Give me Archer. Don't give me the number two.
It's not number two.
It's number two. Maybe number three.
Literally the lift of flying cars is what I got for Christmas.
Yeah, Sigig had an idea of doing it White Elephant style where you can steal somebody else's gift.
Yeah.
The problem with this is I don't know that anyone would want to steal Joby's. So, actually, no, I take that back. In a heartbeat, I would have taken that instead of block. In a heartbeat.
Ooh, we can do like trades. Like I'll trade you Joby and I'll get first round draft pick for next season. We can do it like that, but
what's it called? What is are you guys doing any earnings coming up? Like, are you doing tomorrow or Thursday?
I don't even know what's reporting.
Big day on Thursday.
I was watching. They've reported now. So,
sorry, what's that?
The stocks that I was watching most this week, they've already reported now. So I need to go back into the AMD and Google earnings.
I'm gonna take a look at Eli Lilly and Novo Nordisk, but I'm not going to be waking up for both because they're both pre-market.
Yeah.
You got some pretty big names on. Well, I mean, big names tomorrow for sure. You got Uber, Disney, but on or once the day closes, you got Qualcomm, ARM, MicroStrategy. But there's a couple names that Tevis you might be interested. Amazon. Are you an Elf guy? Pinterest?
I do own Pinterest. I don't own Elf.
Peloton?
No. Pinterest is the only one that'll probably be and Amazon, I guess, caring about on Thursday. And then like I said, Lily and Novo because of my Hims ownership. But other than that.
Got you.
Yeah, Amazon does interest me. So I take it back. CBOE too, actually. I'll pay attention to that one.
Which one's that?
CBOE on Friday. Basically, that can tell us the direction of some of Robinhood's products.
Yeah, they'll give you a nice pair of Nike shoes.
Cloudflare would also be interesting to just see their earnings. But I'm probably not going to do any videos like actual earnings unless you guys want to like pair up and we can do Amazon or something. But
by the way, Roy, do you want my Nike shoes? Because I can't actually use the card because they don't allow it in Canada.
Sure.
or I'll order it to like your house or something.
Yeah, dude, I'd love that. I'd appreciate that.
Perfect.
That's amazing. I ended up letting my wife use the card for her, so I didn't get the Nikes at all. So that'd be.
Wait, what?
I let my wife use a card for herself. And
you didn't get stock market shoes?
No. And I was like, I really want these, but she saw it. She was really excited about it. I'm like, I'll let her get that. So
CBOE was just handing out coupons for custom stock market shoes, but they were just general Nike gift cards, so you could use it for whatever you want. But I can't use it here in Canada regardless.
Well, thank you. When's
Melly earnings?
Yeah, I don't know that one. That's my second favorite Latin America play.
I thought you were saying you don't know that one, like you don't know that company.
Oh, no, we've talked about that. Like, they've recovered. I've not been tracking them for a little while. So.
You don't hold this company?
No. I've got 9 names, dude.
Wow. Yeah, they've done well, man.
What do you mean they've done well? If you actually look at them and you compare them to Amazon, it's like a 2x leveraged Amazon.
Yeah, I mean, in the last year, Tanner.
What?
I mean, in the last year.
Yeah, but look out at them over a long period of time. They are seriously doing well, and it's an unbelievable name. It's one of my stocks. I've been holding it just forever. And it's one of those just set it and forget it. You don't even have to research the company. I feel so confident in their management. Just let them do them.
Yeah. If I had if I was comfortable holding 20 names, Melly would be one of those names. But
why aren't you then?
I would rather buy Amazon, and I want a super concentrated portfolio. So
I've got Amazon.
I have exposure to Melly anyway because of PayPal. So
I've got all these names.
I just want to inform the audience I'm going to input another ad because 1 per hour, and we've been streaming for 2 hours and 15 minutes. Thank you.
Okay. I'm going to say the craziest stuff now.
Maybe I need to do that.
I mean, they still see it once the ad is over. They still see the stream.
No. They don't.
So
they'll come back to real time. They won't come back to where they were left off.
Oh, but they can still rewind. I guess nobody does.
Yeah, they can rewind, but there are people watching right now. It's the premium users. So if you just pay like whatever it is a month, you can just skip all the ads. But that includes mid-roll ads.
I guess I don't know.
Do you ever do mid-roll ads on your thing? Like, you ever insert them? Like, I turned them off automatically because I did a stream where they were just turned on, and then YouTube would like blast people with like every 5 minutes with a mid-roll. And so I just like now just do 1 an hour, I want to test it out, see how it goes.
Yeah.
I think it's definitely something that you should do if you're doing these 3-hour long streams. They are so like it's so not favorable to do a long stream because it's one ad right at the beginning and then the rest is just.
Well, that's the whole thing. Like if I have 100 people coming to see the show and all of them see an ad at the very beginning of the show and then it goes on for 3 hours, then it's like not you're really worth it. But if you do 3 ads in between, then it's like you had 300 people watching. It's like the number of ads was multiplied by 3, you know?
Sure.
Yeah,
No,
I need to figure out this side of it because I know there's a way to give away memberships.
It
I
went
don't know how to
fast.
do that.
Yeah, I gave away memberships on the last live stream. Tanner, did you know about this? Matt told me how to do it.
What?
How to give free memberships to people?
No.
Yeah, so YouTube.
I saw you do that. I thought you bought them.
No. So YouTube allows you to give away 10 every month.
Okay.
You just go on your stream. So Roy, if you go on it right now,
There, yeah.
and then like in the super chat, like just where you gift normally. So you have the emoji, and then right beside it, you have show your support.
Mm-hmm.
And then you click on it, and then just say super sticker, super chat, and then the third one should be like memberships or whatever, gift memberships. Click on that, and you should be able to do it.
Can you give them to individual names, or they have to be random?
No, it's random, and I already did it. I already gave all my 10 away yesterday. So next month I'm going to be doing it again. I'll probably do it like on an earnings stream or something, just give them away. But
yeah, if the Tevis viewership ends up coming over to my live stream after this, just type in "I came from Tevis's stream." I'll give you a membership.
Like you're going to buy them all a membership?
No, I'll give them one of my 10 free ones.
Yeah, but it's like a Russian roulette. Who gets it?
I must be able to select their name and click.
Nope.
Yeah, I don't see. It's not letting me do that. It's making me buy it myself. So I'm like, yeah, I'll figure it out though. So new to all this YouTube thing. So thank you guys, by the way, for everybody that's been watching this really, really much longer stream than I expected. Glad I had that power nap.
Longer.
We appreciate your support. We appreciate you watching, viewing. Love the interaction too. Like this is, a highlight for me. So I don't do it for the $1.50 that I get from a stream this long. I do it because I like the community. So and the interaction with you two guys too. So
the bootleg is my favorite, man. I love listening to you guys because I find on the shows that you guys allow me on to, I talk too much. So being able to actually listen to you guys is new for a change. I'm kidding. But I do actually like the show, and I appreciate the additional coverage that you guys do.
Dude, it's fun just to talk about whatever you want to talk about. Like, I like not being locked into, like, we talked about Palantir, we talked about AMD, we talked about PayPal, we talked about Celsius a little bit, we talked about Nvidia, we talked about Google, we talked about hymns. What else did we talk about? Right? We talked about a whole bunch of stuff.
Yeah, I mean, it's all there.
Yeah. No, it's good to branch out. I mean, I love SoFi, but I also like a lot of other names. And it's been good to cover PayPal or cover Google, and people also want to see your opinions on those names as well. It's really, well, not rewarding, but just like, reassuring, or, makes you feel like what you're doing is correct and giving the information that people are looking for.
Just another perspective. It's good to have, bounce ideas off of. So yeah, it's good.
Thank you, Go Explore. Appreciate that. Very kind. Yeah, I'll figure out how to give memberships at some point, guys. I'm not figuring it out tonight. You'd think I'm in my 40s. I'm an old man.
That's for Tanner. He's the newest member in this hymns bandwagon. Oh, by the way, hymns tomorrow at 4 p.m. I will be streaming with Manuel on hymns, talking about the earnings coming up, doing some predictions. It's going to be fun, so make sure you join 4 p.m. Eastern time tomorrow on this channel. And yeah, anything else we want to talk about?
I think we covered it. It's a good
I
one,
think
guys.
Christopher sums it up.
2 hours and 20 minutes. There you go. Willy Wonka gifted 5 memberships in Roy's chat. Roy now made $9.
Yeah. All right. I can buy a lot of Monster. By the way, I'll because of those super chats, I'll give you guys a free life tip. if you really want a good, and this is not healthy, but if you really want a good power nap, you got like 20 minutes. If you're able to fall asleep quickly, what you do is you just crack open a Monster or Celsius, you chug it, you go to sleep right then before it takes effect. And then in the 20 or 30 minutes after, when you wake up, boy, it just hits her just right.
This sounds like something.
It's like pseudoscience.
Like the opposite of health.
I've done that many times though. Like there's so many times where I'm like so freaking busy. I haven't done it in a while, but when I was younger, it's like, okay, got the 20-minute power nap, just chug the energy drink, coffee if you're into that. Yeah.
It sounds stupid, Tanner, when Roy says it like in this format, but I guarantee you, if you were watching like Diary of a CEO or something, and Huberman jumped on and it was all professionally developed, and he actually said it, like there would be people that would try that.
Yeah.
No, 100, dude. It makes sense in my head, but
it's
like,
not healthy.
No, it is not healthy.
Exactly. Yeah. Who needs biohacking, right? CRISPR, meh. Monster Energy drink, not a sponsor.
All right, wrap this stuff up.
All right.
Roy has that PhD in bro science. All right. Thank you, everybody, for being here. Really appreciate your time. Please subscribe to Roy's or my channel, whatever you're watching. And make sure you join tomorrow for Hymns Weekly, 4 p.m. Eastern on my channel. And make sure you go join Course Boy at 8:30 when he's going to talk about his stupid finance stuff. And we'll see you next week, but most likely in another 2 days for another episode of Bootleg Weekly. Thank you so much for being here. See you next time.
Bye for now.